Go to work. Let's go to work. All right, good morning, everybody. Good morning and welcome. How's everyone doing today? Happy Monday, right? Look at that. Crude oil termination conditions for the win, guys. I hope you believe in them the way I do. Um, good to see you guys. Rob, JW, GWC, Scott, Andy, Rob, who else? E. Webster, Cav, Ron. We got the crew. Hey, Dwight, Jay Worth, or Jay Roth. Is it JW Roth or Jay Worth? I keep thinking that I'm dyslexic. Good morning, Adriana. Well, that doesn't help. That's the same thing. Roth. Okay. Am I saying it right? I'm always worried when if I'm gonna butcher people's. Okay, cool. Roth. Got it. Man, you know what, Andy? They did better than expectations. So, I'm okay. I'm okay with the loss. Man, the Ravens were unstoppable. Their defensive line was just, I felt so bad for CJ Stroud. And you know what? At least the Texans got beat, right? They didn't lose it in the last 25 seconds like a couple teams did. So at least they got beat straight up, which is always a good thing. They didn't fold under pressure. They just got outplayed. So it happens. Guys, I'm excited about the week. I really am. I'm excited about coming in, talking about all the things that we talk about. Um, you know what? It's going to be such a good game, Andy. I like playoff football. I don't watch a lot of football during the year, but I will definitely watch playoff football, and it hasn't disappointed. I'm rooting for the Lions, though. So, with everything said and done, the Lions are who I want to win it all. Um, that's where my pom poms are going to be shaking. And I'm not even a Lions fan, but a very good friend of mine passed away this year, and he was a huge Lions fan. So I'm rooting for him. Um, Guys, let's talk trading. What do you say? Stream paused? Oh, thank you for that. Hold on one second. Let me fix it. Let me fix it. Let me fix it. Guys, I apologize. Discord likes to keep me on my toes sometimes. Usually you guys can still hear me when I'm doing this, so I just have to go through and kind of kill it and then come back to it. So let's take care of that. Where did it go? Discord, in the task, and now we're going to come back into it. Here we go. Hopefully you guys can still hear me as it comes back up. Education room. I'm going to join the stage. I'm going to pop it out. And here we go. Guys, are you good? So GWC, are you on 7 or 8, my friend? And I'll get you through the process. Okay, so here's the easiest thing is just go up to the top left corner where it says CL0224 and change the 2 to a 3 and it'll load it up the most current. Like NinjaTrader 8 is super efficient like that. So literally all you have to do is type it up in the corner and it'll go to it. Change that 3 to a 2 and you'll be set. Or that 2 to a 3, excuse me. Doesn't make any sense to go back. Let me know if it doesn't work out for you, but it should take care of it, no worries. It usually prompts to have you roll, but if it didn't, that's the easiest way. You don't have to go to instrument managers, you don't have to upload or anything like that. Just simply changing the symbol works for you. Um, Today is Monday, January 22nd, guys. Can you believe we're already 22 days into January? At 10 a.m., we have the CB leading index, the cheeseburger leading index. It is low impact, though, which means that the people that announce the news here at forexfactory.com/calendar are of the opinion that it's not going to be a high impact scenario. It's probably not going to make the market bump and jump and spike, or create an untradeable scenario for you. But understanding where news is, when it's happening, each and every morning, this is a part of my routine as I come in and I take a look because I don't want to jump in front of a freight train of emotion. So I'm really looking for the medium impacts and the high impacts. Tomorrow at 10 a.m., we have one that I'm going to sidestep. I'm going to stay out of the way. Wednesday, it's that high impact in these flash manufacturings. And the truth is I don't even know what it means, but what I do know is that it can make things a little wonky. So every morning I'm going to forexfactory.com and just making sure that I'm not jumping in front of anything. They always have an impact. Amen. Let me close out my task manager over here. And then, guys, everything that I talk about, you will find it right here off the Nexgen education page. Um, the tutorial section is where all the rules are going to be, and the software user guide. This is where if you have NinjaTrader challenges, for example, if class wasn't going on GWC and you need a little help with NinjaTrader, you could always click here and scroll down and adding or changing synthetic triggers, deleting old charts templates, adding symbols, rolling contracts, market analyzer. And that would actually help you come through and change your symbol, type it in there, and you would know exactly what you were doing. So I love the software user guys. This is I'll give you guys a fish every day. If you have a problem, I'll hand you a fish. But I also like to teach you to fish. I like to make sure that if I'm not here, you can't get a hold of your salesman or techs in the hospital with dysteria or something. You can come in and really find the answers that you need. And then the tutorial sections where when I talk about rules, when I talk about entries, exits, advantages, all of that comes from the tutorial section. And I say it all. You can't hear me? Guys, give me a Y in the room if you can hear me, please. Let me tell Rob real quick, and hopefully he'll get that one. Sometimes it's on your end. But remember, guys, if you ever can't hear, just tell me. Go, hey, Mark, I can't hear you. Something's weird. And I'll ask the room if they can. And if you see all of those, then it means that it's potentially you. And Andy, it's choppy for you. Let me see if I can. All right. Was that any better? Yours was in and out the volume. Oh, the room is choppy, not the looks. Okay. Guys, it may be Discord this morning. They already bumped me out once. So, um, cool. The picture is good. Whenever you're having Discord problems, guys, I I just kill it. And when I kill it, I don't just kill it with like with the X out. I'll go over to my task manager and I will end the task. I'll get rid of the Discord like that. That's kind of cool, Andy. And then that way, once I get rid of it, it kind of clears it all and starts it fresh, and that tends to be helpful. Here from the tutorial section, guys, I wanted to share with you the definition for a high probability trade. And this is a trade defined as when each indicator on every chart agrees with the rules for the trade. And typically, this is when your triggers are the strongest, when there's no termination conditions, and there are no trouble spots between your entry and your target. Guys, this high probability trend trade, this is your freshman year of college. And before you get to go off and take aeronautical space engineering classes, you've got to pass college algebra, right? You've got to get through calculus and you've got to make sure that trigonometry doesn't stump you. The high probability trend trade is your foundation, guys. These are your core basics. This is a trade that typically wins 70 to 80% of the time when you follow the rules. And this high probability trend trade is a trade that is going to teach you to read your charts. It's going to give you this amazing foundation that you are going to be able to grow from, that you're going to be able to open your charts and really understand where the market is likely to continue and where it's likely to go and where it's likely to stop. And you're going to incorporate these three simple little things. And I say that they're simple, but it takes a little time. It takes some repetition to be able to do it effortlessly and quickly. But you're going to be able to take these three concepts and work them into any trading plan that suits your needs. Where the market is likely to continue is nothing more than an entry spot. For us in the beginning, it's the entry spot for the highest probability trend trade that you can take. It's that point where when the trend is established and everything's going that way, there's always fluctuations in the market. Your likely to continue spot is going to have you pinpointing where that fluctuation is most likely to happen. And that's going to be our rule number three today. You're going to understand where the market is likely to go, and this is going to create management opportunities that take you outside of a very basic approach and put you where you can really capitalize on what the market is giving away. And then finally, where the market is likely to stop. We call these termination conditions. A likely to stop area can stop the trend cold. It can reverse the market like it was never even going up or down. And these likely to stop areas are where the people that control the market are reacting, where they are buying, where they're selling, where they're taking profits, where they're entering positions. You're going to be able to recognize this on your chart, and you're going to understand when it's clear to trade away and when you should just be a little patient. And we're going to talk about these three concepts, and we're going to talk about this high probability trend trade. And that really will be the first, oops, it is not break time yet. That's going to be our first hour. And it's the first hour of every classroom that I teach, guys. I don't jump you to advanced subjects right off the bat because the reality is that's not fair to you. It's not fair to you to confuse you, to have you looking for more than you should be. So we're going to keep it very simple, and we're going to focus on a trade that only has three rules. And these three rules are going to happen on only two charts, but each rule provides an advantage. When you have rule number one met, when you have strong trigger lines, you'll have the advantage of momentum. You'll have a market that is likely to continue in the direction of the trend. And when you have rule two met, you're going to have none of those termination conditions. No area is likely to stop the market. And that's going to give you the advantage of a clear path. And then when you have those two present, they're labeled one, two, three because you want to get them in order. When you have those two present, you're going to have entry rules that put you in where the market is most likely to continue. And that's going to give you the advantage of an entry area. And it's the three advantages together that is the recipe for a trade, guys. And this is not the end of the road. This is not all there is to Nexgen, but this is the trade that's going to teach you to read your indicators. So just three rules, and we're going to do it on two charts. There's going to be a large chart and a small chart. I want you to adopt the principle that you don't have to be able to build a watch to tell time. So we're going to focus on the timekeeping. The large chart is going to define the direction of the market, which direction you should be taking trades. The large chart is going to define the momentum of the market. It's going to let you know if it has the speed behind it, the push behind it. Nice to see you back, Rob. In order to look for the next rule. And it's going to define the areas where the people in charge may be reacting, maybe entering, exiting, and all that good stuff. And these three concepts come from the very first bar. The most current bar on the large chart is going to define these three things. And your first two rules happen on the large chart. When rule number one is met, you will have the advantage of momentum. And when rule number two is met, you'll have a clear path. And a clear path just means that you're not trading into those areas where the market can react. Once the rules are met, we're going to use a refinement process. What happens in this one bar on the large chart can be broken down into about 15 to 30 bars on a smaller chart. And the small chart just, it lets you see the motion within the large chart. And what's going to happen is you're going to refine that broad stroke of a brush and you're going to pinpoint the best of the best area where the market is likely to continue. And this becomes your entry for the highest probability trend trade. Rule number three is going to put you in on that entry. And there's going to be ways to use more charts. There's going to be ways to use more time frames. There's going to be ways to take more trades. But in the beginning, if you allow it to be simple, If you allow it to be two charts, three rules, it's going to keep you on the right side of things more often than not. It's going to create this feeling of confidence because the likelihood of success goes up exponentially when these rules are met. And the two charts are used, and I like to show this picture. Your large chart is the large crowd. Your large chart is the people in charge, the people that want to move the market. These guys establish trends, and these guys create momentum. And these guys and gals, don't let me be one-sided here, they react to those key areas on your large chart, and they may enter or exit, take profits, or they may just start fighting each other, two large crowds in a brawl right in front of your eyes, and your rules are designed to keep you out of that. Guys, excuse me just 1 second. I will be right back. My dog was giving me the universal sign for, hey, I got to go to the bathroom. Um, so I'm not going to let her do it on my couch. Um, Sorry about that, y'all. It's like having a toddler. So two charts, guys. Big one, it's what's going on. It's what the people want to have happen. Small one is going to get us back to our entry area. This is the small crowd. They fight direction. They fight trends. They fight momentum. And they'll shove you right back to the best of the best spots. So three charts, or two charts, three rules, big crowd, small crowd. Keep it simple, guys, and just tell yourself that it's okay for it to be simple. I'm going to give myself 20 days of letting it be easy, of looking for entries. And now the easiest way to get good at what you're doing, guys, the easiest way to become a confident trader, ASAP. And that's what we want, right? Nobody ever says, hey, I want to get good at this over the next 73 years. Everybody wants to be good at this yesterday, but this is the quickest path if you're going to do it. The first one, take pictures. Take a lot of pictures, annotate a lot of pictures, and get every one of those pictures into the room. And I'm going to show you how to take a picture. Um, I put a big sign at the beginning of class. Pull up your capture software if you need help with this so you can follow along. We use two charts, right? Large chart, small chart. So it's important that you share both your large chart and your small chart. So if I click the capture button on my capture software, this was downloaded on your computer when you got the software. And if you start to type in capture or TechSmith, it's going to come up for you. Open it up. I'm going to click that giant red button that says capture. And now I want to get both charts. So this is a click and drag tool. If I hover over one chart and take a picture, I'm only going to get one chart. So what I want to do is I want to come all the way up to the upper left-hand corner of my chart. If your charts are on two screens, it's okay. It's still click and drag. I'm going to left click and I'm going to drag it down to the bottom right. And when I drag it all the way down to the bottom right, making sure to get timestamps, making sure to get prices, I'm going to release. And then when I release, I'm going to hit that camera icon and it brings up my image preview. So my image preview isn't in the room yet. My image preview just gives you something to write on. There's tools up top. You can change colors if you want. If you don't want to use white, you want to use black. If you want to use gold, whatever. There's arrows, and if you click on it, this is click and drag as well. I'm going to left click and drag it down, and my arrow goes down. And before I release, I can name it anywhere at all. And when I release, it's in place. I also have shapes. I can come down and put a shape. Maybe I was thinking about an area, something that was going on. And then finally, guys, there's this call out button. This call out button is the most important tool that you can use. Because what it does is if you left click and drag down, it creates a text box. And this is where you tell me why. This is where you talk about your rules. You talk about your entries. You talk about your advantages. You tell me where you got in. You tell me where you got out. And this becomes our conversation, guys. This becomes your private session each and every day. So when you get this on here, there's two things you can do. You can click copy, and by clicking copy, it puts it onto your clipboard. Come over to the room, Control V, and it's going to drop it right into the chat box. And that's where the second half of class comes in. As I start taking all of your pictures and we talk about the advantages, we look at the trades you're taking, and we really explore what you did well, what you can do better, your chart reads, so on and so forth. The next thing is to use the upload button. And when you click the upload button, it's going to upload to the screencast cloud, and it's going to give you this address, app.screencast.com, numbers, letters. Again, you're just going to copy that. It's going to put it onto your clipboard, come over to the chat box, and you can drop that screencast link in there, and then I can follow it. When I click on the link, up comes your picture. And I say, hey, I see what you did, and that was great, and I like it, and what a great long, and what a great exit. You are a rock star. And then the second thing you're going to do with that screencast link is you're going to go to your spreadsheet and you're going to start using your spreadsheet every day to put the pictures that you take so that you can come back and study them. So in your trade link picture, you can drop that screencast link in there. And that's pretty cool because you can come back and control click and it'll go to the picture. But even more important is go to your insert tab and go to your link tab. And when you click on the link tab, what it's going to do is it's going to take this big long address. You're going to paste it into the address bar like you're going to Google or eBay. And under text to display, you might put Rob's perfect short, right? Or trend trade short or something that lets you know what's going on in that picture. And now you can come back and you can just click on the link and you can see what you did. And if that trade that you took happens to be your favorite kind of trade, well, you can drop it into your favorite looks. You can say, this one fit my rules perfectly. I want to make sure that I catch this every time. So this is going to be my favorite trade look. And I'm going to fill up this entire spreadsheet with pictures of entries, with management lessons, with patterns that repeat themselves, and even those likely to stop areas, those terminations. And that's the second half of getting to where you want to be, guys, is make sure that you're filling up that spreadsheet. Make sure that you're putting every trade that you take into it. Make sure that you're putting every picture, even if it's just a chart read, into that spreadsheet so you can come back and study it. And the idea is that every morning you go back to that trade journal page and you study what you did yesterday. What worked well, right? What didn't work? Because we don't want to keep doing what doesn't work. That's the definition of insanity. What felt easy? What felt forced? And if you ask yourself these simple questions every day, you're going to begin to see patterns in the market that are bringing you success, that are following your rules, that are providing you advantages. But you're also going to see patterns that seem to be removing that success, whether it's in the market, what it's doing, or here's the big one, guys, whether it's in you, because everybody has a thing when they begin to learn to trade. Some of us have the fear of missing out. And when we have the fear of missing out, our entries tend to be a little early. Um, and if you post a picture in the room, then we can talk about those entries and we can give you the reasons why that patience piece is so important. Some people trade into those termination conditions, those likely to stop areas without advantages, and we can have that conversation as well. So making sure that you annotate, go back, study it. It's going to prepare you for the day. It will accelerate the learning. And guys, that's going to get you to where you want to be the fastest. It's been proven time and time again. We're about to learn the trigger line and Fibonacci rules for when it's okay to trade, guys. The idea is that you simulate, that you practice, but you practice the correct rules. Because a lot of times people like to get lucky on simulator. It makes them feel good. There's a dopamine kick. They're like, I made $1 million simulated dollars jumping in and out. I paid 72 million in commissions, but look at that positive number. I'm ready to go live, right? So what we really want is we want you practicing the right rules and embracing those advantages because longevity is the key and luck does run out, typically right when you go live. Don't practice the wrong trades. And we're going to simplify. We're going to talk about the high probability trend trade. We're going to focus a lot. It's breaking up for you as well. Let me See what I can do, guys. I'm just gonna try and bump a couple things and see if it helps. I'm gonna disconnect my headphones and I'm gonna reconnect my headphones. Ron, it sounds good to you. So, John, it may be you. Guys, let me mute and come back real quick. Hold on. Sometimes just a little sly there, and it's all good there. Discord's playing tricks on people this morning. And I apologize for that, but unfortunately, it's out of my hands. I find sometimes a good reboot gets things back and running. So hopefully that works for you. Yep, Rob rebooted and he's back and sounds good now, so that's great. So just in case John can't hear me, there we go. Reboot and re-enter and just give it a go. Hopefully that helps. Okay, cool. But it's choppy. It's got to be a Discord thing. Did you get your new computer, John? Maybe it's a Windows 4. You're on your brand new Screaming Fast. I was chuckling about Windows 4 the other day. Awesome. I like the Screaming Fast computer. Then it's probably a Discord because mine's pretty quick and my internet is outstanding. And every now and then I get little chops in there. As we're going to talk about this high probability trend trade first, because it does, in fact, typically win more than it loses, and it does create confidence through the memory of success, and it turns you into a chart reader. So it makes sense. Let this be your foundation, guys. And we're really going to talk about the entries. You need to learn the looks so that they become easy, and that's where recognition comes from repetition, guys. That's where those pictures really pay dividends. And on the third page, we've got client trades. We've got what you guys present in the class. Longs, shorts, great management, poor management, which is okay. I've got pictures of all your entries. You guys just absolutely taking advantage of the software. There's about 300 there. I've got entry rule sequences for you guys working on entries. I've got mechanical managements. If you're one of my NASDAQ traders, guys, there's a section over here dedicated to NASDAQ. Um, as you begin to learn a little more on management, you can start putting pictures in there. I can hold longer here. I needed to exit here. GWC had an amazing picture of utilizing some divergences for an exit today. That would be a great picture in the management section. Patterns repeat themselves all day long, and then terminations. The goal for the new user is to make your favorite look section look like the one where I did the work on, with as many pictures as you can handle, because the more pictures, the more times you type on a chart, the more you reinforce all that good stuff. So we're going to get to high probability trend trades, guys. We're going to talk about this trade that typically wins 70 to 80% of the time. We're going to talk about the rules. We're going to look at them visually. I'm going to remind you guys, posting in the room is going to get you some feedback. Make sure that you tell me what you're doing. Make sure you tell me why you did what you did. Even if it's not rules based, maybe it's your rules based. Remember that this is an education room. So tell me what you're doing. You may have just found the next great trade. But the idea is that everything that you do that's bringing you success, we want it to be repeatable. We want you to be able to do the same thing over and over. I want you to be able to find 100 pictures of your perfect entry so that you can look at it and you can say, here's 100 pictures of a rules-based entry, and 78 of them won. Because what that does for you is it creates confidence, guys, and there's a trust in the methodology. And when you trust the methodology, you don't miss the entries. When you don't trust it yet, when you haven't invested that time into understanding the looks, you will hesitate. And if you hesitate, you're going to miss the great trades and you're going to look for opportunities to take the not so great trades because you're kicking yourself that you missed the great trades. So repetition creates recognition. So we're going to get recognition right now, guys. Three rules. Everything starts on the large chart. Large chart rule number one says that we have to have strong trigger lines. And strong trigger lines only happen if you're trading with the direction of the market. If the background is green, it's going up. You should only be looking for rules to be met for high probability trend trades long. If the background is red, it's going down. You should only be looking for rules to be met for high probability trend trade short. Guys, if you never fought the trend, it would eliminate a ton of mistakes for you. It would keep you on the right side of things. It would keep you focused on the absolute best of the best. And remember that this is an investment, this is a job. It makes sense to give yourself all the advantages. Once you define direction, let's make sure that the trigger lines match colors, right? The small triggers and the large triggers must be the same color not only as one another, but also the color of the background. And if the three don't line up, you do not have strong triggers, which means that rule number one isn't met, which means you've already forfeited one of your advantages. So when the background is green, your small triggers, the solid lines, and the large triggers, the dashed lines, should also be green. They should be wide, separation between the two lines in the angle of the trend. So if it's going up, they should be blasting up like sharks about to breach. And if it's going down, they should be dive bombing like I don't know, like an eagle going after a fish, right? Wide in the direction. And then it's the separation between the small and the large, like scissors that have opened, getting ready to cut. That separation lets me know that I do, in fact, have the strong trigger look. That separation lets me know that the odds are favorable for the market to continue in the direction of the trend. Odds favorable momentum is one of my favorite phrases, guys. Odds favorable momentum is what you have with strong triggers, and odds favorable momentum pushes that market. Odds favorable momentum can break those key Fibonacci areas, and odds favorable momentum, I hate to say you guys are going to make mistakes, but odds favorable momentum can really cover up some of the mistakes that new users make because it's hard to stop a freight train when it's fully loaded running down the tracks. So in an uptrend, odds favorable. In a downtrend, odds favorable. Get used to that word, type it on your charts, because when you have strong triggers, it is the most favorable look for buying Fibonacci support on that smaller, faster refinement chart in an uptrend, and in a downtrend, it is the most favorable look for selling Fibonacci resistance on that smaller, faster chart. On your large chart, it looks like one of these tails. It's like a wick at the bottom of a price bar. That wick is that retracement on a smaller, faster chart. It's that little push down when everything is going up. You guys are going to be able to pinpoint where the bottom of that tail in an uptrend or the top of that tail in a downtrend is most likely to form. That's going to become your entry, guys. And it's also going to become a study tool because you're going to start circling these tails and creating pictures when the rules are met. It's going to create recognition. So strong triggers, guys, a separation. It has to be going with the direction of the trend. So let's take a look. Crude oil down is the direction. The smalls are red, the large are green. Do I have odds favorable momentum? Is it possible to have strong triggers if the trigger lines don't match? I think not. Rule number one's not met. It's close, but let's give it a second, right? Let it happen. In the NASDAQ, we've got up, but the smalls are inside of the large. And I guess I should tell you what that means. When your large triggers eat the small triggers, when the scissors close and they return in, guys, that's a weakening of the large triggers. And when you have weakened large triggers, anything can happen up or down. You've lost momentum. You see this coming into key areas. You see this right before reversals. So if we go back to the NASDAQ, that's weak triggers. And it's weak triggers right at an area. And look at the pushback on the smaller, faster chart. And then the flip side of that is when we had all of that momentum, there's your tail, guys. You guys are going to be able to pinpoint right where the market is likely to continue. You're going to be able to take advantage of this momentum and carry it all the way until it begins to end right at the key areas. And there's a great example of one of those tails where you guys can find opportunities getting into the market. Rule number one is probably my favorite rule. It makes great things happen for new users. It really pushes the market in the direction of the trend. But it reminds you that 90%. So Don, share a picture. If your stop was too close, share the picture. Let's talk about it. 90% of your day is spent waiting. 90% of your day is spent waiting for the advantages to happen. And this is a great picture kind of illustrating that. On the large chart with odds favorable momentum starting on the left side, that market does in fact push down. It keeps going south. And then you get those anything can happen triggers, those weakened triggers. And that precedes the reversal, even without the benefit of Fibonacci down there. From the reversal, the momentum comes back, the triggers are strong. There's one of those tails, one of those potential entries for you guys. And then it weakens again and it reverses again and it creates momentum again. So it's cyclical and it keeps going through. Your job is to be just a little bit patient, wait for the best of the best, and really embrace those advantages. And then after the momentum, you can see that things begin to kind of go wonky, right? The large triggers are red, but the small triggers are green. They don't match. I can't have rule number one met. And then I get red triggers in a green background. And once again, I don't have the advantage of momentum. When you start seeing these colors not match, guys, this is when the buyers and sellers are fighting. This is a transition phase as the people in charge are fighting for supremacy. And there's two ways to approach it. The first one is to predict what's going to happen, which typically results in a lot of losses. The other one, and in my opinion, the better one, is to simply sit on your hands and let them fight it out because one of them ultimately will win and they're going to give you that odds favorable momentum. And not losing a lot of money in a transition phase is an outstanding way to really enjoy the money that comes to you when you have the advantages. So, rule number one, guys, odds favorable momentum sets the tone, gets you moving. Everything really kind of comes together with that odds favorable momentum. Once you have it, we have to have a clear path. So, we're still on the large chart. The large chart has already defined direction with the color. You guys are experts at that one. It has already defined the momentum from the most current bar with the small above the large. They're wide, there's separation. This chart has both momentum and it's in the direction. And now we're going to define the areas. We are going to look for those likely to stop areas and make sure that they're not in our way to make sure that we have the advantage of a clear path. And we're going to do that straight from the tops and bottoms section. And we're going to talk about what it means to have a termination condition in the areas where the people in charge react. And the areas can be Fibonacci resistance, it may be Fibonacci support, it might be those yellow one-to-ones that can act as either support or resistance, depending on which direction the market's going. And then also these divergence high lines, these divergence low lines. These are just indications of a loss of momentum. But we're going to use the recipe for termination conditions to know when they have the potential to turn the market. And everything starts with termination conditions with price reaching the area. Remember, these areas are where decisions are made. So to kickstart the decision-making process, price has to get there. The sellers have to get to support, or the buyers have to get to resistance. But when price, those dynamic Renko bars reach the area, in this case Fibonacci support, all you have to do is ask yourself, where are my trigger lines? If your trigger lines remain above support, you've reached a termination condition. If price reaches resistance and the trigger lines remain below, you have reached a termination condition. And it really is a very, very simple recipe. You're going to get them at highs, you're going to get them at lows. So this magenta line is a representation, it's a loss of momentum. That's what divergence means. That's not a termination condition, it's just a pivot with a loss of momentum. But when price reaches the area, your dynamic Renko bars reach the divergence high, you ask yourself where the trigger lines. If they remain below, you have a termination condition, guys. You have an area that may stop the market, that may reverse the market, may create an untradeable bounce in the market. And I want you to be okay with the idea that you don't know. You don't know if it's going to break, if it's going to hold, if it's going to reverse, if they're going to fight. You have absolutely no idea. And there's no reason to get caught up in the moment. You don't have a clear path. Same thing at resistance, triggers below, one-to-ones, triggers below. Guys, these are going to happen at highs all day long, and it takes just a little bit of patience so that you don't get caught up trading into it. And the same is true for lows, guys. Um, there it is. It all starts with price reaches the area. If price reaches the area and the triggers remain above, you have a termination condition at a low. No more short trades. Whether it is one-to-ones, Fibonacci support, or one of those divergence lines. The pivot itself is not a termination, but when price reaches it, the beginning of the recipe, now it's a termination condition. So it's really pretty simple as a brand new user. If price reaches one of those key areas and the triggers don't get through it, you're at a termination. And I want you to see, we'll use the S&P. Price reach support. Um, a term is a term, Rob. There are no good terminations. There are no bad terminations. It's either a termination or it's not. And there's a beautiful price pulls back to support, even with a red background, even with odds favorable momentum. And when price reaches support, all the triggers remain above. So you guys aren't going short into the area because it may create a bounce. So we're not even talking about good tops or bad tops. This is crude oil. Price reaches the divergence high. All the triggers remain below. Guys, we're at a termination condition. We're at an area that may stop the market. So if you hope to go long, you're going long without the advantage of a clear path. And then finally on the NASDAQ, look at how that divergence high, price reached it, triggers don't break. There's your termination condition. It creates the full reversal. Rob, there's your strong top. It gives you odds favorable momentum. And then I'll be good gosh golly darned, there's that tail with all that momentum. And it may not have been an entry, but look at how it continues down, coming straight from that area. So guys, termination conditions are designed to keep you safe, to let you have that giant visual of what you shouldn't be trading into. Does that make sense, everybody? Price creates a divergence low, not a termination, because the recipe is that price reaches that divergence low. When it does, triggers remain above. Now it's a termination condition. And then, Rob, to go on what you're talking about, when a termination condition, a no trigger lines through termination condition, reverses the market, we're going to call this a strong bottom. A strong bottom means that decisions were made right at a key area, that the trigger lines couldn't break, that it was the perfect termination condition. So much so that it reversed the market in its entirety. Large triggers went from red to green, right? Everything changed. This is a strong bottom. This is the precursor to the highest probability trend trade that you can take. We call this one a pivot stop out of a prior divergence line condition because there's the divergence, the loss of momentum, and when they retested it, it became a termination. These are pretty strong, and even more so when they coincide with Fibonacci resistance or support. You see another one of those. Price comes up, reaches multiple areas of resistance, creates that pivot stop out. If this termination gives me a full reversal, guys, this is a strong top. But a strong top is only a strong top until you reach the next termination. So here, price reached resistance, triggers remain below, no long trades, and it pushes all the way back to support. It does create a reversal, but we still reach support and absolutely no trigger lines broke through. No reason to go short into that area. Eventually it retests. 90% of your day is spent reading indicators. And then from this termination, it reverses and it gives you odds favorable. And we haven't reached the next key area. That tails your entry for the highest probability trend trade you can take from a strong top. So for the brand new user, there's two options, guys. Price reaches the area. If the triggers don't break, just wait a second. Be patient. Be patient. Incorporate into your trading plan the idea that you don't have to be in the market every second of every day, that you don't have to be in every move. Every penny in the market does not belong to you, guys. We are in the business of finding advantages. So the advantage happens when the path clears. Price reached Fibonacci resistance in this picture. The triggers remained below, and we all sat on our hands and did nothing for a moment because we didn't know what was going to happen. Well, when small and large get to the other side of resistance, resistance behaves as support. And it's not the color of the fib that tells me it's support. It is the small and the large triggers on the other side of it. Now my path is clear. Now I have the advantage of a clear path. I also have the advantage of momentum, and there's one of those tails, guys. You're going to be able to pinpoint where that tail is likely to happen and ride that wave of momentum to the upside. So Let me find. I'm going to go back to the first picture and I want you to see this. Price reaches support, and we're just going to pause for a second. When the small and the large break through the area of support, it behaves as resistance. You'll notice that when the path clears, we have odds favorable momentum. And since all trigger lines are below the area has changed. The path is clear because we haven't reached support. And there's your tail, guys. There's that pullback where you guys can pinpoint an entry, get into the market at the best of the best spot, and ride the momentum down to the next key area. This is what we're talking about right now, is being able to pinpoint these tails, but just making sure that we have a clear path first. I'm going to talk about one more scenario. Is everybody okay with the very simple, the very basic, let's stay focused? Price reaches an area, absolutely no trigger lines break. Let's sit on our hands and do nothing. If both the small and the large get to the other side of the area, the path is clear, and that path remains clear until we reach the next area. Well, the center slide embraces momentum. The center slide is the visual representation of how powerful momentum can be. When the small triggers break through an area, the large triggers don't make it yet, but the small triggers smash through an area, and I have odds favorable momentum. This is where strong triggers can break areas, guys. This is an area that has the potential to break. But since it's not broken yet, it's not a clear path, and rule number two isn't met. And if rule number two isn't met, well, then it can't be a high probability trend trade. So what we're looking at here is your first medium probability trade. And I'm going to give you a plan to take this one in the best of the best fashion. Because a medium probability trade means that most of your indicators line up for a trade. However, a small issue exists. Your small issue is not having a clear path. In order to take a medium probability trade, you first and foremost don't want to give up any more advantages, guys. The more you give up, the less likely it is to work. So you don't want to sacrifice momentum. You don't want to sacrifice the best of the best entry. And medium probability trades can be taken, but they have to be managed assertively. And your ability to read your charts will allow you to manage assertively. Um, you're going to take quick profits, maybe at the trouble area. If this area has the potential to break and you get in right here at the tail, you may take profits at that key area that you're hoping breaks, right? And get to a zero loss level and make sure that you're not giving it back on these medium probability trades. And we're going to talk about the rules for those. But this is a look that creates opportunity, but you have to be reading charts to be able to catch it the most effective way. And then finally, one more. And I like to take a picture of this picture and share it with you guys. I probably have 700 pictures of what I'm about to do, but this is such a great visual, guys. Everything is pushing down. The momentum is its strongest. It smashes through one area of support. And when it reaches the yellow one-to-ones, each and every one of you in this room, all 39 of you said to yourself, well, where are my trigger lines? And when it was determined that all your trigger lines remained above, not one of you went short into those one-to-ones. And thank goodness it kept the powder dry. Look at the reaction right off the fib. The buyers gave it a healthy shove all the way into Fibonacci resistance, and all the trigger lines remained below resistance. So we weren't going long yet, but we weren't getting stopped out of the short. We're in a holding pattern. And then the sellers fight and the triggers don't agree. And the buyers fight and we can't get triggers above an area. And the sellers fight. And even with odds favorable momentum up, I don't have a clear path. And then ultimately, things start to get to the other side of trouble. They get to the other side of the trouble with momentum. And now the path is clear. And guys, there's your entry. There's the highest probability trend trade you can take, the one that happens after a termination that creates a full reversal. All of this nonsense where the buyers and sellers are fight, guys, that's the 90% that I don't want to see you guys getting caught in. That's the 90% that kills accounts, that kills morale. If you're just patient and you wait, it all does come together. It's like that bus that keeps showing up. Guys, that 10% is where the money is made. Um, and if you can take this highest probability trend trade, typically winning 70 to 80% of the time, it's not going to be the trades that you take that are defining success. It's going to be the trades that you don't take when the advantages aren't present. because you can lose six, seven, $800 trying to predict the fight and give back all the easy money. So I like to show that one, that little 90-10. It does. It's an account killer, Jay Roth. It is an account killer. We've all done it. We've all been caught in consolidation. But the wonderful thing is, and look at this, when rule one and two isn't met, there's no reason to take the trade. And you just have to train your brain to say that. Man, I don't have momentum. I don't have a clear path. I'm just going to do nothing for a while because eventually it's going to work itself out. And it takes a while to trust that. And it's hard to sit still. It's the hardest thing you'll ever do is absolutely nothing. And these are going to be your large chart. You've got to trust, Rob. If you don't trust your methodology, you're going to hesitate, right? If you don't trust your methodology, you're going to skip the best trades and you're going to take the ones that your gut says to take. And I don't know about y'all's guts, but mine are functionally retarded. My guts are not smart. They pick the wrong trades all the time, which is why I have to adhere to the rules. Is everybody comfortable with the idea that if price reaches an area and the triggers don't break, sit on your hands and do nothing, guys? And if price hasn't reached the area, you still have a clear path. And then if the smalls break and the large don't, this area has the potential to break, but it hasn't broken yet. Guys, these are the very basic concepts to termination conditions. These are using large chart lines. Resistance becomes support, support holds and takes you to the next resistance. These are using large chart lines to help you gauge when you've reached a trouble spot. To be considered a clear path, so this is a great example, John. Um, and this is part of the patience. So I want you to see something. Here, price reached resistance, right? And when the small and the large finally get above, it's a 50-50 on this one. So while this area broke right here, let me use the shape. This area ultimately breaks and becomes support. This area hasn't broken yet. So you may run into these situations where the fibs are stacked. And you may never get a super clear path. It may always be a 50-50 over the course of a little bit of time. And just because they're there, it can be a little frustrating. And you might say to yourself, man, I just can't seem to find a trade. But if you really incorporate the patience piece and you go back and you look at your charts, what you'll find is that there are opportunities. They're just not every 10, 20 minutes. So termination creates the reversal, gives me odds favorable, maybe an opportunity for the short until it gets to support. And then support goes from here to resistance and back to support. And there's nothing that I can do in this hour and a half. There's just nothing. But ultimately, it reverses the market and it sets it up, and I'll start looking for these opportunities. And then when we talk about entries, when we talk about entries, we're also going to talk about the distance and how to gauge it. And I'm going to give you a pretty good visual of how to do that. But do you see how the small broke through and the large didn't? And it's pushing down, right? The area never actually broke. We're about to talk about these divergences and using them to help gauge when these potential to breaks aren't going to break, or even when the market has a clear path or odds favorable in a clear path. There's one thing we can use on the small chart to help us see that. But before I do that, I want to ask for everybody that's a little new that's hanging out, lines on the large chart define the areas that may be problematic. Lines on the large chart define the potential trouble areas. Lines on the large chart are what we're looking for. On the small chart, there's one termination condition. It has nothing to do with lines. Lines on a small chart are going to be used for entries. We can use divergence on the small chart. We can use three divergences in the same price range. It may terminate the trend. Keyword, may terminate the trend. Three divergences in the same price range with weak triggers is a little more powerful, may terminate the trend. And then three divergences in the same price range with weak triggers, and then that third divergence from a low is higher than the previous or that third divergence from a high is lower than a previous, that's a head and shoulders pattern. That becomes even more powerful. So these three divergences may terminate a trend. You're not going to see them on the large chart because the large chart is slow. But when you have this look, three from a low, three from a high, guys, that's the look that's going to help you see change happening on the large chart before the large chart can show it. And you're going to use these three divergences also as a management tool. And big thank you to GWC this morning. I want you to see how he did it. He took a beautiful long trade. He had every advantage on his large chart, and three divergences in the same price range gave him the opportunity to manage out of that trade rather than taking a large loss. And that did actually reverse the market and push it much lower. So these three divergences not only identify potential turning points in the market, but they're also going to give you the power to manage those trades, to look at those trades. And if you are in the perfect short, three divergences may be your indication that it's time to cut ties, the same way it was for GWC. So three divergences is going to help you predict lows and highs. It's going to help you manage trades. Um, and it's a great indication. Sometimes it'll help you define a little bit of overrun. It'll help you see, let's see if we can find one. One, two, three divergences lines up right with the bottom here, and that's what rockets the market up. So it's just one more visual to give you guys advantages, because really that's all it is, right? Is we're just looking for advantages. Um, so far, the large chart, that's not the picture I wanted. The large chart has defined the direction, and the direction is up in this chart. It's green. The large chart has defined momentum through strong trigger lines. And the large chart has now defined areas, areas that may stop the market, that may create a bounce. And on this particular large chart, you'll notice that we cleared resistance and haven't, or cleared resistance, it became support, and we haven't yet reached resistance. So what that means to us is that the path is clear. So my rules are met on the large chart. It's time to look for an entry on the small chart. It's time to use that refinement tool, that smaller, faster chart. And I'm going to show you a picture of the refinement just so you guys can kind of wrap your head around it. On this picture, come on, picture. Well, that picture isn't working for whatever reason. Let's see if it does it this time. There we go. On this picture, I circled the one bar on the large chart with the momentum, the clear path, all the great stuff that we're looking for. Inside of that black box, the bottom of the bar is the bottom of the move on the small chart. And inside of this bar, your small chart goes up and goes down. 15 to 30 bars, guys. That tail is this retracement. That tail lines up with an area of resistance inside of favorable large triggers. You're going to be able to pinpoint your entries through this refinement process. So we're going to use the small chart. The small chart is the large crowd. They fight, or the small crowd. They fight everything the large crowd says. We love these guys. They get us to our best of the best spot. And rule number 3 says that we're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. This is the wordiest of the rules. Guys, you're literally going to wait for the market to come to you. You're going to be able to buy a pullback. You're going to be able to sell a pullback. When everything is going up, you are going to buy the market when the small chart is on its way down. And when everything is saying down on the large chart, you're literally going to sell the market as the small chart is coming up. We're going to use these retracements. But the key is we're going to wait for them at areas, fibs, mid-bands, yellow one-to-ones. The way you're going to use the lines on the large chart to define problems, you're going to use them to define entry points on the small chart. And those fibs, mid-bands, yellow one-to-ones, need them to be inside of what we call favorable large triggers. Favorable large triggers means that the large triggers and the synthetic triggers are one on top of each other. They are overlapping, snakes riding piggyback. And the tighter they are on top of one another, the smaller your window of opportunity. And the window of opportunity is the best of the best spot where the market is most likely to bounce. So when it's tiny, risk is tiny. And that's one of the keys to what we do, guys, is we can manage our risk before we ever manage our profits through having momentum, through having a clear path, and now through having the smallest area where the market is most likely to bounce. So we're going to do that, and I'm just going to go through the sequence, guys. And the sequence that I'm about to go through is right here in the spreadsheet that I drop in the room every day. Please steal it, take it, study it. I'll drop it in right now since I'm talking about it. But everything starts, guys, everything starts on the large chart. Everything starts with odds favorable momentum, with a clear path. Um, and then John Tripp, this is a good example. Here, price is only 9 ticks away from resistance. And this is a great lesson, guys. And on the small chart, it's actually hit resistance, but the areas are defined on the large chart. So I've got 9 ticks from the top of this bar to get to resistance. And most of us are thinking that's not enough room. I can't make any money on 9 ticks. That seems pretty silly to take the trade. But remember, we're not taking it from the top of the bar. We're waiting for the small crowd to do their thing. We're waiting for a reversal bar on the small crowd, on the small chart. This reversal bar signals the start of the pullback, that shove against momentum, that shove against the clear path. And at the time of the reversal bar, we're going to start looking for our entry area for the best of the best. We're going to start by looking at the top of the trigger lines to the bottom of the trigger lines. And this range right here, from the very top to the very bottom, is where I'm going to look for my areas. I'm going to look for fibs, mid bands, yellow one-to-ones, and I'm going to refine that into my window of opportunity. So for a long trade, it goes from the highest point of support to the lowest point of support inside of favorable large triggers. And I think it's important that you write that on your charts, inside of favorable large triggers. Not the large triggers themselves, but the areas that fall within. And these triggers are down here, but your highest area is 5 ticks above it. So your window of opportunity goes from these yellow one-to-ones to the midband. These yellow one-to-ones are way outside of the triggers. They are not in the window of opportunity. Once you establish where the market is most likely to continue, you're going to activate a limit order. Whoops, I'm going to show you the exact same picture. You're going to activate a limit order. You're going to right click on your small chart and you're going to activate that limit order right above the highest point of support. Because remember that the large chart said odds favorable momentum. It's screaming to the upside and it hasn't hit anything to create a bounce. So you're going to try and capture that trade right at the top of the window at the highest point of support. You're not going to fight the momentum in the clear path. Um, and this becomes your entry for the highest probability trend trade. And it's either going to come get you or it won't, right? You can wait, hope, wish, pray, whatever you want to do that the small crowd gets there. But at this point, it's just a matter, it's up to them. You're either going to get it or you're not. And it looks the same going the other direction, guys. Everything starts on the large chart and we just wait for the reversal bar. And at the time of the reversal bar, we're going to look for our triggers. And once we identify where the triggers are, hopefully they're tight on top of one another, we're going to find the areas within. And then from the areas within, we know the lowest to the highest is our window of opportunity. So we're going to activate a limit order right at the bottom because of all that momentum in a clear path. And if the market comes back to that limit order, you are in a trade. You're in a trade with momentum, a clear path, and having entered where the market is most likely to continue. And guys, this is your first 20 days with Nexgen. Your first 20 days. If the only thing that you do is learn how to identify entries, um, great entries create manageable trades. You can start to build trust in the methodology by circling those tails. Remember, we don't trade the tails. What we're trading is the pullback on the smaller, faster chart. We're trading and entering that pullback to an area inside of favorable large triggers. But if you circle the tail on a large chart, you're going to notice that it lines up on a small chart. And when these come together, guys, that's your best of the best. This is the one with the least amount of risk. This is the one that typically wins 70 to 80% of the time. This is the trade that creates confidence through the memory of success. And then I'm going to find the picture, and I believe this is the one right here. When you're talking about, well, how much room is enough room? So we're going to look at this one real quick and we're going to draw some pictures. The top of this bar is this far from the problem area, right? And that's a horrible amount of room. What an unmanageable trade. And this is one of the advantages of Nexgen, guys, because we trade pullbacks. We enter on a pullback, which means that that tiny little shape turns into a trade with an awful lot of potential as opposed to what it looked like before it got there. You can see that if you circle the tail, it lines up with the area inside of favorable large triggers. So John Tripp, almost there is pretty good, right? We still have room. It's when it reaches those areas that we run out of room, that we have to go through that process and really make sure that we're giving ourselves enough room. And guys, the general rule of thumb, and everybody is different, is I personally like to have at least $200 worth of profit from my entry point. And that's just me. Divergence pushes all the way to the mid band. Notice that the large triggers didn't follow. All of my trigger lines are above the areas of support. No reason to try a short into that area. Pretty cool, right? Rule number 2 for the win. Support breaks, becomes resistance. You do get a little pullback right to it. And then you get those anything can happen triggers. And those anything can happen triggers ruin the day. All the way up, couple divergences. And then one more. NASDAQ appears to be playing nicely today. Odds favorable. Guys, look at that pullback right to resistance inside of favorable large triggers. Is it just me, or is that unbelievable? This happens each and every day, guys. Every day. All sorts of markets. And then here's our S&P. And Miss Debbie said she made a quick 200. My guess is she entered somewhere around here, got paid, got out. We're going to find out in a minute. Second hour is going to revolve around y'all's pictures. But before I do that, for you guys that are brand new, for you guys that are working on entries, that you're making sure that you're giving yourself these advantages, this checklist is designed to keep you focused on the best of the best. This checklist is designed to keep you looking for those advantages. Is the market coming from a good top or bottom? Is it coming from a termination that creates a full reversal? If it is, rock star. We go into that 70 to 80%, right? If it's not, you're going to need to use those divergences on the smaller, faster chart, right? You're going to have to make sure that things don't change mid-trade. You're going to be asking yourself, do I have momentum? Do I have the best of the best? Do I have a clear path? And did I have an area inside of favorable large triggers? Notice that that is bold and highlighted. If you say yes to all 4 of these, I've never had anybody in the history of this checklist do worse than 70%. Most people are in the mid 80s, but I like to keep it as, what is it? Under promise, over deliver. Never had anybody do worse than 70%. But I'm going to tell you right now, it's pretty freaking boring. You'll catch 3 or 4 trades a day. That's it. And if you catch 4 trades a day, you win 3, lose 1, you're making money every day of your life, right? What a great thing. But the average human isn't that patient. But once you get your entries down, life gets a little easier. So that's one checklist I can give you. Here's the exact same checklist with pictures. Some of us are visual. I'm a very visual person. What is a good top or bottom? And this video is amazing. I just put it right above you, Jayworth. So I just dropped it in the room. You can, whoops, wrong one. Here we go. You got it? Cool. You can download it. You can also click and drag it over to like your desktop. And then here's the same one. You should download this one and study it in the morning. Good top or bottom is a termination that creates a full reversal. The video here is outstanding for new users. Do you have odds favorable momentum? There's your visual. Go in both directions. And the reminder, anything can happen up or down. Termination conditions, no clear path, potential for a clear path. And then finally, the windows of opportunity, guys. Windows of opportunity. So Adriana, and I'm going to show you guys why this is so important. Could that be treated as a continuation? Couldn't everything be treated as a continuation? So, Adriana, where are you coming from? Are you coming from a good top or bottom? Are you coming from an area that created a full reversal? Or is that kind of a pivot in the middle of nowhere? And this is a great segue to my next one. It's not a termination, right? Price didn't reach an area there and the triggers didn't stay below. Price just kind of turned from the middle of nowhere. So it doesn't fit the rules for a termination. Does that make sense? Because this is a pretty important concept, especially on this look. So Adriana, if it's not coming from a termination condition, let's go to the next one. You do have odds favorable momentum. Would you agree? That's an awesome look. That's probably the best look for momentum. But you don't have a clear path. So you have one, two, three Fibonacci areas that haven't yet broken. There's a lot of momentum they have the potential to break, but they haven't broken yet. So on your small chart, you do have a window of opportunity, and it extends from this support here all the way down to this support here. This is your range where the market is most likely to continue if it's going to continue. But just looking at this chart, I don't have a good top or bottom, and I don't have a clear path. Does that make sense? It doesn't mean that it won't go up. It just means that it's not a high probability scenario. So if you do take this trade, you have to take some things into consideration. If we're forfeiting the clear path, let's go to the NASDAQ right now and see what it's doing. Don't have the clear path, the divergence prints, and that was it right there, wasn't it? I had a 50-50 with divergence, and it pushes down. So if you got into the mid band, you probably lost. Most people won't hold that much risk. So this is the next thing, Adriana, and this is a NASDAQ lesson because I know you're trading NASDAQ. Your large chart on the NASDAQ is a 13.2. Your small chart is a 13.2, your large chart is a 34.5, which means that your small chart on the NASDAQ is the same chart as the large chart on crude oil or the S&P. One of the things that I have noticed in my study is that when your small triggers are super strong against you, it almost never works out to fight them. And you'll see this, and you probably saw it live. See how they acted as resistance 3 times on the way down? Boom, boom, boom. And it kept pushing down with that momentum. Does that make sense, all you NASDAQ traders? When your large chart looks like this, the large chart says up, everything is good, and you're trying to make that decision. Where am I going to take my trade? On the NASDAQ, very often, waiting for the close on the correct side of the small triggers creates a huge advantage. The rules are still met over here, but this is something that's pretty unique to the NASDAQ. Waiting for the close on the correct side of the triggers. So, Adriana, was it an opportunity for continuation? Absolutely. You just had to be a little patient. On the NASDAQ, absolutely. With this look on the large chart, momentum wins. But you don't know which fib it's coming from. Does that make sense? You don't know where in the area it's coming from. This divergence says it may push lower. So using that one little safeguard, waiting for the close on the correct side, creates this huge advantage for you. It buys you some patience, and you can literally have a stop order waiting for that close where you get into the market and it just absolutely rifles up. This is NASDAQ specific, guys. Does that make sense, Adriana? No, it doesn't make sense? Oh, yes. Sorry, I'm trying to keep up with them. And this is in the NASDAQ section here, guys, the yellow section. We talk about it. This one says don't fight smalls on the entry chart. So it's the same look, keeping you patient. Um, and it's so helpful. So could this be treated as a continuation? Absolutely. You just had to instill a little bit of patience in your methodology. Guys, the NASDAQ trades super similar, but it does not trade the same. It doesn't, Don Sanchez. Not at all. And if you're a brand new user, that's not your trade. And if you don't have the repetitions to be super comfortable and confident with your reading, it's not your trade. And guys, what is your trade in the beginning? I'm going to give you the KISS plan. Oh, and I'm going to drop that other checklist with the pictures in it right there for you. So Don Sanchez, and I'm glad that you said that, but the bottom doesn't look good. Remember, guys, that everybody's different and everybody's in a different place and everybody has a different plan and everybody has different pain tolerances. So I'm going to share this before we go into the KISS plan. The key to all of this, guys, to all of this chart reading, to all of this trade taking, to all of this day trading is having a foundation, such a solid foundation, understanding the basics, and then each week you start compounding. You are not shackled to the high probability trend trade. You are not bound by contracts to only taking the best of the best. And what you'll find is that as you grow, it gets easier. So for the new users, I blanket with very conservative rules. Recognition of advantages, because when you recognize advantages, it gives you the ability to recognize disadvantages. Um, and having a solid plan that optimizes the chance of success for the new user as they learn to read the indicators is the best bet. So for new users, for brand new users, it's going to feel very much like I'm telling you, every termination condition is bad. Not having momentum is horrible. What the hell are you thinking? Your areas for entry, they have to be there or no trade. And guys, I don't do this to keep you out of trades. I do this to keep you in the best of the best trades. I do this to give you the highest chance of success. And as you learn to read your indicators, you'll understand when exceptions can be made. And just like anything, the more time that you spend with it, the more you'll see. And this opens doors for you. And I wanted to put this in here too. One of the biggest challenges is when new users see older users, when inexperience sees experience, taking trades that don't fit the rules, and it creates confusion, right? Don Sanchez, but the bottom doesn't look good, and the KISS plan says don't take the trade if there's not a good bottom. And you're absolutely right, and that's great understanding and recognition. But then what happens is as you grow with the software and you learn to trust momentum, well, maybe it opens doors and maybe it's worth it to take a shot if you can get a low risk entry. Um, and we find ourselves playing the role of the trade police. Well, that didn't fit the rules, and that didn't fit the rules, and that didn't fit the rules. And guys, don't worry. Don't worry about what everybody else is doing. Just because it's not your opportunity doesn't mean that it isn't an opportunity. Some of the trades I take would make your head spin. Some of the trades Ron C takes would make your head spin. But they're based on our ability and our experience reading the indicators. So until you get there, all that to be said, here's a plan that's a stepping stone. Here's a plan that will optimize your chances of success with the high probability trend trade and the 50-50 trade. And the picture that Adriana just posted doesn't even come close to meeting these rules. But it doesn't mean that it's not a great trade. It's just not your trade yet until you get to that level. Simulation study, class feedback, continuous practice, guys. You're going to create your own plan. You're going to create a plan that suits your pain tolerances, that recognizes your your abilities to read your indicators, and it stems from that. But I like to give you a simple plan for consistency in the beginning because I want to see you here next week, next month, and I don't want you blowing yourself out chasing everything until you learn the best of the best. And it starts with your entries, guys. Entries are the most important part of what we do, getting into the market at the best of the best spot. And what happens is your simple plan for consistency starts with never fight the large chart direction or the triggers, right? Never fight it. It doesn't do you any good. It creates disadvantages. Don't fight the direction. Don't fight those triggers. And then define your entry. 20 days getting in at the right spot, guys. You have checklists, you have spreadsheets that show the process. Learn how to recognize the window of opportunity. Get in at the right spot, and then use the same mechanical approach to management that you used for entry, guys. Nothing but if then. If this happens, then I do this, and not what does my gut say or what does my wishing and wanting have. So your management plan depends on the grade entry at the area inside of favorable large triggers. And if you can define where the market is likely to continue, well, then you know where it shouldn't go. And that's where your stop goes, where the market shouldn't. And at this point, you're either going to get stopped out, and anything that wins 70 to 80% of the time loses 20 to 30, or the market's going to give you a reversal bar. And at the time of the reversal bar, you manage your risk even further. You're going to put it 2 ticks above or below that reversal bar. And what this does is it puts you in a position to lose less if you lose. You've got two profit targets, you're trading two contracts, and at this point you either take a tiny loser, no big deal, it's all part of a positive equity curve, or it hits your first target. And the first target's only $100 in the distance. And with all that momentum and a clear path, if you're taking the correct entries, this one gets hit more often than it doesn't. And when it gets hit, there's $100 in your account that nobody can take. And you're going to move your stop to break even. And you're going to have zero risk on a trade when everything says it's likely to go down. And it makes it easy for you to sit on your hands and hope that it hits the next target. And if it hits the next target, guys, it's only $200 in the distance, which means that on two contracts, one trade, $300. That's the goal for new users. Pragmatic, methodical, no room for emotion, no room for opinion, just really keeping it as basic and straightforward as you can. And guys, that's for the high probability trend trade. There's your management, there's your entry. Everything that you need for that is on the spreadsheet, right? There's that mechanical entry or the entry, the management. And then what's really cool is once you start to get good at it, and once you start to recognize advantages and odds favorable momentum, you're going to understand that there's opportunities to hold for bigger moves. You're going to understand that these great entries give you the ability to hold to that next fib because that much momentum and a clear path typically pushes the market. And $300 grows into other amounts. And there's a lot in management here, but you need to go through, present in the room, get some feedback, and work on your management plan. But until you have the ability, keep it simple. And then, guys, here's the 50-50 trade, the one area not broken trade. And I want you to see this. And Adriana, can we use your chart? And I want to show you guys something. So I'm going to take a picture of Adriana's chart. Because in the beginning, you're going to ask yourself, is this a continuation? Hey, Mark, is this a trade? So, Adriana, if you're following the KISS plan, if you are taking the best of the best, optimize your chances for success, and then Don Sanchez, this kind of goes back there. Do I have odds favorable on the 13-2? Yes. Smalls outside of the large on the 5-1? Yes. No divergence on the 5-1? Ooh, that's my first no. And then coming from a good top or bottom? No. So for the brand new user, guys, this isn't a trade that you should be in. Why? Because divergence, well, the patterns are strong triggers, clear path, area inside of favorable large triggers, right? So the pattern for a high probability trend trade looks exactly like the pattern for a medium probability 50-50. Let me show you that. So let me, and I'm going to back this up just a little bit, and I want you to see this. Because it all starts with the large chart. Everything starts with the large chart. So I'm going to take all those off, right, Adriana? Odds favorable momentum. Let me get this up here. One divergence doesn't kill it, right? That's a pullback to resistance inside of favorable large triggers. One divergence. What did this one do? This one pulled. Nope, that's it right there. Make that a little bigger. Ooh, it's way back. But what happens is this looks like a high probability trend trade, right? Don, if you're not just spot on crude oil and S&P, don't worry about it. There's nuances to the NASDAQ that we can talk about later in the day for sure. But right now, the point is, doesn't that look exactly like a high probability trend trade that I wouldn't be worried about at all? With odds favorable, price didn't reach anything, everything is amazing, pull back to resistance inside of favorable large triggers. Like that's everything that I look for. And Adriana, that is the pattern. But then if I put the template back on, what you realize is that exact pattern that says take the trade no matter what between the two charts is not a clear path once you look at it, and look how it ends up. There's your first one, and then three divergences. So the patterns are the same, but there's going to be little rule differences depending on whether the path is clear, right? Or whether or not the path isn't clear. And this one came from a termination that created a full reversal. One divergence doesn't worry me. Two divergences tells me I'm probably going to manage out of it. So while the patterns are the same, there are going to be different scenarios. Sometimes you're going to have a clear path. Sometimes you're not going to have a clear path. Sometimes you'll have divergences. Sometimes you won't have divergences. So while the up, down, the fluctuation, the momentum, everything is the same, there will be scenarios where you will or will not take a trade based on other items. Does that make sense, everybody? And that's where chart reading comes in, to be able to recognize in the moment that that isn't a clear path, right? Or that that isn't the best momentum. And when I don't have the best momentum and I have a loss of momentum, maybe that's not my trade. And then Don Sanchez talking about NASDAQ nuances. These strong triggers just kind of reinforce that I'm not taking this short. And look how they act as support and push the market up. Isn't that freaking amazing? But that's not a thing on the other one. So the patterns are good. The patterns are solid, but you still have to ask yourself, is it a clear path or not a clear path? Because that'll change the decision-making process. Is it the best momentum or is it not the best momentum? Because that'll change the decision-making process. And guys, that's where time comes in. You've got the greatest software in the world. Now you just have to get the repetition. The only thing that I can't give you is experience. Bad top, right to the midband, large triggers don't follow, and it finishes the move up to the next key area. So Adriana, check it out. Smalls above, larger not, odds favorable, no divergence, pulls right back to support inside of favorable, and off it goes. So guys, the idea is to just get repetitions, to keep it as easy as you possibly can, as focused as you possibly can on the best of the best, and understand that it's a marathon, that you're going to get better every day, that you're going to get better every time you take a trade. Every time you post in the room, we're going to have a conversation about what you're doing. I'm going to drop the KISS plan in there. I have had people get funded on those Apex accounts, Top Step accounts, Take Profit Trader accounts within the first 30 days of being with Nexgen by keeping it focused on the best of the best. I've also had people have an incredible amount of success with the KISS trading plan and then decide one day that they're too smart for it and watch their success go backwards. They started adding charts. They started adding little rules. Well, this says, that says, I know it's not really the best of the best. And you have to go through that process, guys. You have to go the process of understanding what you see the best. So that was a long first hour. I apologize. No, I don't, because that was a good first hour. A lot of information. Are there any questions about the high probability trend trade? Are there any questions about what it means to have momentum? Are there any questions about how you can identify a clear path? And then, of course, one more time, are there any questions about identifying the window of opportunity? You have to let it be sequential, guys. You have to go through this process and be okay with the idea that you don't know everything on day one. Get direction down. Once you get direction down, start working on momentum. Go back, take 100 pictures of momentum. Make sure that it's second nature to you. And then once you have momentum down, go back and start taking pictures of termination conditions. Guys, my favorite thing to see in this classroom, and I'm talking to my newer users, you guys that are still working on it, is I love seeing pictures of your trades. I like even more of seeing pictures of your rules met or your rules not met, where you have a picture and you drop it in the room and you say, price traded, price reached resistance, the triggers were below, this is a termination. Because what you're doing is you're reinforcing exactly what it looks like when your advantage goes away, and then show me. Small and large cleared resistance, it's now support, the area is broken. You're reinforcing the rules and the advantages. And then once you're good at terminations and you can identify the three, let's work on entry areas, guys. Ask for feedback every day if you don't have it, because it's so important. I love talking about your trades and what you do. And with that being said, I'm gonna go take 5 minutes and I'm gonna stretch my legs. I'm a big fan, guys. Stretch your legs every now and then. Sitting in front of a computer for 7, 8 hours straight is difficult. It's difficult on the spine, it's difficult on the eyes, and it kills your brain, turns it into mush. Go stand up and run a lap. That's what I'm going to do. I'll be back in 5. When I come back, we're going to talk about your charts. We're going to look for advantages. We're going to talk about entries, exits, all that good stuff. And I'm going to answer any questions that you have. So, if you are an up and coming NASDAQ trader, show me some NASDAQ pictures. Let's talk about some of the nuance. If you're learning to use your market flow charts, post the pictures in here. Let's talk about it. Let's read them together. If you're working on a plan that has nothing to do with anything that I've talked about, post some pictures. Talk about what it is you're looking for. And I'm happy to hold you accountable to your plan once I know the rules. I'll be back in about 5, guys. All right, let's get back to work. Jay Roth, have a good one, man. Thank you for being here. And guys, just a reminder, if you ever post pictures and you need feedback before you have to head to work or something, just say the word. Let me know so that we can get you taken care of. I'm going to scroll up to the top of the day here in the chat box, and we're going to take a look at what you guys are doing today. And GWC got us started today, and he got us started with a great picture, and it used those three divergences. Um, and great annotations on the chart, guys. I want you to see this. Termination, good bottom, full reversal, odds favorable, clear path. Everything on the large chart is perfect. On his small charts, he had one divergence, two divergence, and then the triggers get above it. They break, and then he gets one divergence, two divergences, which isn't a deal breaker. And he takes an absolutely beautiful entry. Um, and he's in at 87. He's looking for 3.25 on the first, but it just doesn't get there. It doesn't get there. It gets to 90, it looks like, and that's where the divergence is created. And two things that I like about this picture, whoops, sorry, is one, the entry is beautiful. The entry is perfect. It's right at the area inside of favorable large triggers. It is textbook what we're looking for. And the second thing is it gives you the lesson on the divergences. Three divergences can kill a trend. So when you've already got two, when that third one prints right on the third bar, it's all right to take profits. Not a bad deal. Beautiful pictures, great trading, GWC. It just didn't work out. This is one of those instances where you're in at 87 flat, at 89, $100 three times goes a long way. Beautiful trade. And then divergence kills it. And let's see, where are we? Not a lot of pictures being posted today. Don Sanchez, let's see what you have, my friend. Don Sanchez, everything says up on the large chart, cranking through, almost a clear path. Price pulls back, you get in, you get out, you get out. Pull back, your stop was too close, the market was too fast to react. And that's one of the things. Hey, Don, where are your synthetic triggers? Just curious. Did you make the choice to not have them? So on your small chart, notice how you only have one set of large triggers? That was at 9:30. Let's go to the NASDAQ at 9:30. Let's see what it looked like. Man, NASDAQ has been all over the place, hasn't it? I think that was it right there. So I want to see what the synthetics look like at the same time. I mean, there has been a ton of movement in the NASDAQ today. I didn't get any rules-based trades this morning. Almost there. All right, your entry. This was it right here, Don Sanchez. And ours look a little different. My mid band was lower than your mid band. So something's going on. On your right clock, on your right chart, Don, right click and go to templates. And I want you to reload. Because what I think what you did, Don, is you may have put in a 13.2 Rinko, but what you need to do is make sure that it says NQ 13.2 or NASDAQ 13.2. Because what happens is that this is a 34 and this is a 13.2, but John Novak has built templates for us to make it look like a 5.1. so that the patterns are the same no matter what market you're looking at. And if you look at what it looks like with that NASDAQ 13.2 on there, it pulls right back to the mid band inside of favorable large triggers. No reason to get stopped out of that trade. So I think that may have just been a little different computer look there that got you. Yeah, and I've done it before too. Like I've been putting templates here, and I'm like, oh man, it's my large chart. Let me put my 13.2 Rinko in. And then once I put a 13.2 Rinko on a 34 chart, things look a little different. Yeah, so just right click and put in that NASDAQ 13.2 template. And that should get you where you need to be. Yeah, Rob, just get comfortable with what you're doing on two charts first. That's my personal opinion is you can get everything that you need on two charts and then you'll open doors a little bit. But see how it looks different? It's similar, but it's different when you put a 13.2 template on there. Um, what happens, Rob, is you're going to grow into it. You're going to grow into that range chart because you're going to be able to read your charts. You're going to be able to see those things coming through. And then, Don, if you don't have those synthetics, man, then it just becomes difficult because it gets a little harder for you to follow your rules because your rules say use the large and the synthetics working together. It's a great looking trade. Everything was right. You just you just didn't have enough information on there. So if you want, when you're done running those indicators, just show me the picture of your charts and let's make sure that it looks like what it's supposed to look like. Because your head was in the right spot. You knew what you were looking for. You had the advantages. It just didn't quite work out. And then Miss Debbie says a quick 200. I knew it. Odds favorable, clear path, perfect entry, gets in, second divergence takes you out. Beautiful trade, Debbie. Very nice. And then GWC, everything says up. What a beautiful mistrade. I agree, GW. Beautiful continuation look to get up there. And sometimes we missed it. Um, guys, this is just me, and I'm a little touchy-feely hippie for sure. I hate the word missed. And it doesn't mean that it's wrong. You didn't get it, therefore it was missed. But when you say, man, I missed this trade, a lot of people will try to make up for what they missed. Since I missed this trade, let me be a little more aggressive on the next trade. And not everybody does that, but some people do. You have to know your personality. My personality is that if I missed a trade, damn it, that was my money, and now I have to make it up. So I love saying just not my money. Yeah, not yours. It's just not my money. That's it. I wasn't there. For whatever reason, I was grabbing coffee, getting a waffle, going to the bathroom. I don't know. But if I wasn't there, I didn't miss it. Now, if I talk myself out of it, that's a different story. But if I wasn't present for it, then it wasn't a mistrade. It was simply an opportunity that I wasn't in the neighborhood for. And then Adriana, odds favorable, clear path. And then Adriana, your 13.2 has the same thing. You don't have any synthetics. You're actually using the other one. You fixed it? Okay, cool. I love it though. Absolutely beautiful. Absolutely beautiful. And then I believe your sister from a different mister is coming in and taking the same trade. Everything's down 50-50, one divergence. You get quick profits, and then on the second divergence, it's a great opportunity on that 50-50, Cindy, to get out and not give it all back. Does that make sense? On the 50-50, when you know it's not a clear path, I love the first one. Good top one, boom. Adriana, have a good one. Thank you. Great trading. Knowing what you're up against goes a long way. And that second divergence is a great opportunity to manage. Nicely done. And then Andy, let's see what you got, Andy. Andy, just doing the jump in, right? Can't see your entries. Took a Nolan Ryan fastball and hit the ball. Good thing you had a designated runner. Might not have managed otherwise. Right on. Looks like a big jump in. And you jumped in with weak triggers getting into the area. Would have loved to have seen an entry up here and just ride that wave all the way down. Nicely done. Trading with direction, trading with all the good stuff going the right direction. And Mike, I noticed that I missed yours. Got it. I just noticed. Um, so Mike, and this may be just preference, but if the large chart leads the way, why not let the large chart be the first thing you read and then the small chart be the second? Let me line up your timestamps. 942, 942. So everything's going up, looks good. We know that this is the pullback here, right? From the top of the triggers to the bottom of the triggers, from the highest point of support to the lowest point of support, and they just pushed right past you, didn't they? Oh, but you kept your stop in place. You gave it a little extra. No worries. No, but you nailed it. Either from the top or the bottom. And one of the things, when it's coming right off of those one-to-ones and divergence prints, it's probably going lower. I love that you got in at the lower point, but you absolutely nailed your window of opportunity. Your blue box shows it perfectly. So if you're in at 91.50, you had 12 ticks. Was it just that arbitrary 12? Because it worked for you that time, didn't it? Nice job. That's a great trade, dude. And it's a great hold. Everything says up, and the path is clear, and that little loss of momentum pushed it a little bit lower. You kept your step in place, and man, it just worked out beautiful. What a great way to start the day. Nicely done. And guys, that's all our pictures, so let's see what we have. Um, NASDAQ says odds favorable, 50-50. Strong triggers against, guys. Doesn't make a difference. NASDAQ is railing today. There's the tail. Did you guys see how quickly that happened? This is why trading the NASDAQ for the new user isn't the most advantageous. It's fast. Um, but the patterns work. The patterns definitely work. 50-50, one divergence. It gets caught in the scramble. 50-50, three divergences. It is a psychological difference in saying not my money. When my brother and I talk about stuff, and guys, I'm going to tell you right now, being a chart reader is it's a double-edged sword. Because one is it opens up all these amazing doors for you. It opens up all these doors to get you where you want to be, to give you the ability and the insight to see these advantages and these patterns. And then the other side is when you start seeing the same pattern over and over, and you know that it's a pattern that doesn't win more than it loses, but you know that it wins sometimes, you have to fight your chart reading and make sure that you're not trading the reads, but rather the rules. And not my money that's the phrase. NMM is my brother and I say that phrase all the time. When we see a trade that is a potential trade, but not a rules-based trade, we'll literally type to one another, NMM, NMM. So yeah, you're right. Oh, I don't give opinions, Rob. My opinions are worth nothing. Andy, if your P&L is always green at the end of the day, are there still ways to get blown out? Absolutely. I'll show you how. I think it sounds like math. So the way Apex works is if I go short, or let's just say I go long. If I go long here and I get out here, and I'm like, okay, and I made $500. My account goes from 50 to 5,500, right? But, and my trailing threshold is 2,500, Andy. So my trailing threshold follows it, which means that it's at 48. Does that make sense so far? But because I was up an extra $500 in that trade, my trailing threshold isn't at 48, it's at 48,500 because it's from the highest point of equity. And if you keep doing this, if you keep giving $600 back on trades, holding for home runs that aren't happening, you could technically be positive and still blow out your account. Because what it does is it shows an inability to manage your money. It shows that you're so hell-bent on hoping for the big moves um, that you're giving a lot back when you should be getting paid. And that's one of the things about Apex, is Apex is designed to get paid. Apex is designed to not give it back. And that's what that trailing threshold does. If you're up $1,000 in a trade and you're break even though you didn't lose money, your trailing threshold just came up $1,000. So it went from 2,500 to 1,500, and that becomes difficult, right? That's problematic. So yes, it is possible. I think. I think you'd really have to work on it to make it happen. So how do you minimize that? Gosh, Cindy, beautiful. How do you minimize? I love that you caught that one. That happened so fast. Nicely done. Beautiful trade, Cindy. So how do you minimize it, Cindy? I'm going to use your chart. I'm going to show you. It was super fast. But you know what's cool, Cindy? Is probably right about here, you started thinking about the short, right? And right about here, you started thinking about the reversal bar. So by the time you got a reversal bar, you already knew exactly where your limit order was going. Does that sound about right? So even though it was super fast, you'd been thinking about it since here when all this happened. And that's one of the things that the experience gives you guys. Is even when the market is absolutely screaming, Cindy knew that she wanted a short. She knew where she wanted the short from. All she needed was a pullback. So when it happened, and it's not uncommon, guys, is you'll get your market order in while the market's still coming down. Because you know if there's a reversal bar, you're going to place that trade. So it might have started here and then moved here and moved here and moved here where it finally gets hit. You will literally be able to anticipate it, like leading a duck in duck season. All right, and then to go back to Andy's question, and just my 2 cents, right click, John Tripp. Whoops. That's not a real chart. I got fooled myself. Right click and go to data series. Even on 8, same thing. Scroll all the way to the bottom. So make that roll up and down. And at the very bottom, it says plot executions. Use the drop down and go to text and marker. And then that'll get your trades back on there. Let me know if you need me to do that again. Cool. So Andy, how do we avoid giving it all back on Apex? And this is me, and this isn't next gen or anything, but as someone who trades Apex, when I get to this blue line, I get the hell out of the trade, and I don't worry about what happens next. Or at the absolute most, I've got to stop at a reversal bar marker or something like that. So anytime I reach a key area, I get tight. And if it breaks, cool. But if it doesn't, who cares? I'll wait for the next trade. And I have found that is the easiest way to beat Apex is to have the mental idea, one, that you don't have to trade 75 accounts, you don't have to trade 75 contracts, you don't have to have a 10 lot every time, that a 2 lot consistent getting paid, $500 a day, guys. $250 per contract every day is $126,000 on the year. So you just have to adjust your mentality. I'm going to take only the perfect entries. I'm going to manage my risk appropriately, and I'm going to get paid at the trouble spots. And let's see, this was from 66.50 to 51.50. That's essentially 15. That's a $300 one contract. That's an amazing trade. Hey, John, have a good one, man. We'll see you tomorrow. 50-50, three divergences in the same place. Is it just me, or is it pretty cool when you just stop and look and you say, hey, my rules aren't met, and I didn't take the trade? 50-50 from a good bottom. First one might not have given you an entry. If you took the second entry, you knew to manage out. That's all we're doing, guys, is we're just getting comfortable with the idea that we have rules. Weak triggers beyond the area, pulls right to resistance. Absolutely no triggers through. No reason to go long. Thank goodness. Rules not met. Straight into a fib. Absolutely no triggers break through. And the bounce happens. Morning, George. Thanks, JN Fibs, for the win. Happens a lot. Woo, that's quite the hold. Um, George, you take the momentum. And this is one of those things, and I see this a lot. And I'd love to hear your thoughts on it. You take the momentum style trade, but you absolutely refuse to let momentum take you out. So much that three divergences, a trend change on the small chart, um, everything went wrong on that short. And you held it. I'm just curious how often that works for you. I like the 50-50 with one divergence, right? Or I like the momentum. Get in, get out with the loss of momentum, maybe even take the next trade. And then divergences kind of come through. And then you exited finally when everything started going back in the direction of the trade. This is the stuff that makes my hair a little more gray and a little thinner than it used to be. Glad you took profits on that one. That was a lot of work. You guys have the best hammer in the world. Let's learn how to build a house, guys. That's all we're doing, right? That's all we're doing. What do you want to talk about? It's 11 a.m. We've covered every one of your pictures. We've gone through the live market. What's on your mind, ladies and gentlemen? What do you need help with? Shogun, nice to see you in here. Anything you want to talk about? Craig, I see that Clemson flag. Anything you want to talk about? James Bird, Haji. Always good seeing you, Shogun. 35 ticks, Rob? So when you talk about crude oil, um, oops, that's not a good picture. All right, so when we talk, actually, you know what? Let me make this better. Let me make this easier. So in crude oil, from 20 to 21 to 22, each tick in the market is $10. So each tick in the market is $10. Um, every 10 ticks, so from 20 to 30 is 1 point, and that's $100. So from 54 to 19 is 35 ticks. That would be $350. And that's it. And Ron got that one. But every tick, so from 34 to 35 is 10 bucks. From 35 to 36 is 10 bucks. So you just got to do that little bit of math in there and get it. And then on the S&P, every tick is worth $12.50. So every point is worth $50. And then on the NASDAQ, every tick is worth $5. So there's actually 20 ticks in a point. Oh, thanks, E. Webster. Not a smart man, but you do know what ticks is. And yeah, the Ninja Trader, there's so much information on the Ninja Trader site. So take advantage of it. And then here I'm looking at large triggers up, small triggers down, resistance in the form of one-to-ones. Synthetics are up, large are down, smalls are up. Is resistance going to hold? Is it going to continue up with the trend? Easy place to start forming opinions, isn't it? I think the market's going to do this. I hope the market does that. There's a 50-50 with divergence that didn't seem to work. What do you guys think? From support to resistance to support, we know where the fight's happening. Are they going to break below? Are they going to stay above? You guys see that? That's live. That's a fight between buyers and sellers live happening right in front of you. You've got a big red line and some big blue lines. You know exactly where the trouble is. You can see where the sellers stole the momentum from the buyers. You can see where the buyers stole the momentum from the sellers. You can see that the colors don't agree, that the path isn't clear. And the best option is to let them fight. Who's going to win, guys? What do you think? Will the buyers win from support, or will the sellers fight back right here at this divergence high? Does anybody know for sure? I know one guy that does. Will the buyers win? Very doubtful is what it says on the buyers. There's that divergence high. Your charts are way different, no fibs. Are your synthetics printing? They're not, because there's 52 and you don't have it on your large chart. Your synthetics aren't printing on your large chart. Just reloaded. Yeah, you may have some tick data going there that's a little weird. Look at that. Divergence high for the win. Holy smokes, you guys knew. You guys are impressive, I'm not going to lie. I would have gone long. Look at that mid band right inside. Oh, I was so ready. And then the termination condition said, don't do it. You bet, George. You calling it a day? Nice job today. Guys, I know it's silly, and I'm like, oh, look at that, look at that, look at that. But you really will get to that point. You'll get to that point where you're like, you know what? Support held, the divergence high held. Why am I even looking at this chart? Why am I not making a milkshake? Why am I not asking Ron what he found on the beach yesterday? Why am I not getting a bowl of Frosted Flakes? Because Tony the Tiger inspired me, right? It's okay to do nothing when there's nothing to do. Hell, when there's nothing to do, that's when you make money because you're not giving it away. These are weak triggers, and it's weak triggers with a clear path, and it's weak triggers with a clear path, but no areas inside of favorable large triggers. How do we handle that one, guys? I've got one of three from the icicle fish. Is it cold out there, Ron? We're like in the 30s and rainy today. 60 tomorrow, but it's going to rain. I wanted to play golf tomorrow, but they're giving us a 90% chance of rain. 38 high yesterday. All right, guys, I'm just going to take pictures of things and annotate charts, and we're just going to talk about them in terms of advantages. This is the S&P. 55. That's not horrible. The S&P says down. Dig it. When I think about the momentum that I have, anything can happen up or down. Does anyone remember at the very beginning of the class where I said very often anything can happen triggers, reversals, create stronger pushes in the opposite direction, right? So right now I don't have momentum, but I do have a clear path. And I hope this makes sense to you guys because this is how I speak to myself every time I look at a chart. I literally go back to and talk to myself about advantages. Everything is down. I should be looking for shorts. I have weak triggers, so I don't really know. It's not likely to continue in the direction of the trend, or at least not with aggression. But I do have a clear path, so there's no bouncing. But I don't have an area inside of favorable large triggers. My areas are outside, right? So what does that mean? That means that I have, where's that picture? It means that I only have one out of three, guys. 33% of my advantages are present, 66% of them are gone. What does that mean for me? That means that with these weakened triggers, it might bounce from here, right? Because the rules of termination conditions say that it may stop there and continue down. But with the loss of momentum, couldn't it also make it all the way up here? And this is how I think to myself. I do have a clear path, but I don't have momentum, and I don't have any areas in the target zone inside of those triggers. So I just, whoops, wrong one. I'm just not sure. Where's it going to be? Oh, look at that. Isn't that neat? That's the process, guys. And I just said neat to everybody. But that's the process. If you speak to yourself in terms of advantages, it becomes difficult to give away 66% of them. And now it pulls all the way up to resistance. And my triggers don't tell me that it's time to trade. 90% of your day is spent reading indicators, guys. 90% of it is going to be reading indicators, is going to be waiting, just waiting for the best of the best. And I'm going to tell you, this is where I ramble a lot. So I'm just going to take a minute, and I'm going to leave you guys with the S&P. We'll see if it goes up or down. 48.83.62 looks like a three-layer cake. 62. What am I looking at? 88.62? Oh, 83.62. Yeah, one-to-ones. Excuse me. Excuse me, guys. Mid band, couple levels of resistance, large chart and native to the 13. There's a lot of resistance there, isn't there? Seems like a bad idea to try to go long into it. I don't know. Maybe it's not. We'll see. Excuse me. I'm going to go get a drink of water. I'll be back in 5. All right, guys, let's finish up the day strong. S&P, small's above the large. The large are starting to go wide. The trend is up, right? Direction is up, momentum is up, and we are into a wall of resistance. If you thought you were going to outsmart the market and go short on the reversal bar, you probably just got stopped out. Um, Rules keep you safe. Still on crude oil, 50-50, three divergences. Look at the scramble over here, guys. This is why we use a smaller, faster chart. You can literally see all of the nonsense, all of the fight on that smaller, faster chart. When everything lines up, it's easy. Can't have favorable large triggers because the large are down, the synthetics are up, the smalls are up. Large chart says more up, but look at the fight that happened at the key area that hadn't broken yet. There's no reason to get caught in that fight. You can wish you were in a long all you want. You can hope that it goes up all you want, but it's so much easier when there's nothing in the way, when there's not one of those key fight places. Tony, did your charts come up looking a little better? I hope. NASDAQ? Remember that I'm on 7, though. I am on 7. And I change mine a lot. But it had the 44. And I actually had a 52 that didn't come through on 7 either. Still no fibs. Nothing at 44. Are you 10 days back? Huh. Oh, well, that's part of it too. If you're 11 days back and I'm 10 days back, our charts are reading totally different swings. There's a whole nother day worth of information under the fib process. You are at 10? Okay. Um, I'm not sure. So what I do when I have a concern, and this is just me, and because for me, if I look at my brother's charts and they don't match my charts, then I start to get these trust issues, and that's just me. I'm like, oh no, what's going on? And it could be him, and Tony, it could very well be me. Um, there was one time I didn't match him, and I was like, oh, and I did everything I could to fix it, and it always kept looking the same. And then my brother goes, oh yeah, I was off. And I'm like, damn it, John. Um, so sometimes it might be me, but if I'm worried about it, a lot of times what I'll do is I'll go through and I'll reset and repair the database manager, um, and just try and give myself a fresh start. Especially, you did that too? Well, here, then let's do this. Hold on. Just for grins, um, I'm going to disconnect from my live feed, and I'm going to try it on my end, and we'll see if it changes anything on my end. So here's the NinjaTrader 7 way how to do it. Options, data, reset, okay, repair, okay, and then I'll reconnect. And who knows, maybe it'll change it. No blue or red fibs makes you sad. I hear you, man. I hear you. But I know I don't always assume that I'm right because my last name's Novak. Sometimes I go through and I adjust my charts a lot, and I put wonky stuff on there, and I change the days, and I try to do them for lessons. So um, it could just be me. As I'm going to go ahead and share with you, here's the reminder because I know I have the new people in here, right? And maybe there weren't a lot of trades today, but guys, I don't think I've had more than 10 pictures posted today. To minimize your learning curve, post your pictures of your trades in class. But don't limit yourself to pictures of trades. Um, if you're studying termination conditions, so show me pictures of termination conditions. If you're studying entries, go back and circle those tails and work on window of opportunity, right? And keep working on the things that you think you need help with. And then from the trade size, show me every trade, win, lose, or draw. And if you win and the rules are wrong, you might have that short-term victory, but it's potentially a long-term failure. And that's what I don't want. I don't want to see you guys getting lucky, doing things that you can't repeat, that aren't testable, and getting that long-term failure. How are you going to know the difference? You need feedback, guys. It's just like any other arena. If you played sports, you had a coach, right? When you started your career, you probably had a mentor, somebody that had been in that business longer than you, showing you the way. You need feedback and you need to know what you did right or wrong. And that's just part of the magic. That's what we do, guys. Making sure that you get the feedback every time you do something. Um, Simulating, practicing. You're in a no risk environment on the simulator, guys. It doesn't hurt to lose simulator money. If it does hurt to lose simulator money, then you're definitely not ready to go live. You want to take so many pictures and so many trades and get so much feedback that when it is time to go live, it's just muscle memory and you're just going and you're just doing what you do because that's what you've done, right? And then Tony, mine looks the same. Exactly the same after the reset rebuild. So it may be a Trader 7 thing. Um, or it might be you, it might be a workspace thing. Um, I'm tempted to open up my NinjaTrader 8 and try and run both at the same time just to take a look. Keep it simple, guys. Use Market Replay. Is everybody using Market Replay? Because you can double or triple your repetitions. I did 2 days worth of Market Replay yesterday, just looking at the week, going through it, seeing if I missed anything. I fix mistakes and I take trades that I missed and I skip trades that I shouldn't have taken. And if you really want to see the potential for your trading plan, if you really want to see what's capable, use Market Replay and have this worksheet right next to you. And every time you think you see a trade, hit pause. Before you enter, hit pause and go through your checklists. And only if the checklists are met, take the trade. Um, and you will be floored at what you can accomplish. You'll be floored at how smart you actually are. And what you're doing is you're going to take those pictures and you're going to commit them to memory. And just repeat the process every day until you always take the correct trades. Because if the correct trades create a statistical advantage and they win more than they lose, doesn't it stand to reason that you're guaranteeing yourself that you can win when you always take the correct trades? And very often, what I find is that people that begin to lose are straying away from rules. I can tell you personally, I start losing when I start breaking my rules, and when I stick to my plan that's been proven to win more than it loses, it's difficult for me to take losses. It really, really is. There's the NASDAQ. Look at that. Strong small triggers for the win again. If you waited for the close on the correct side, it was easy money. Little NASDAQ lesson there. Smalls are peeking their head through. It's got the potential to break. We'll see what happens. And you know what? Let me go back to the ES, and I want you guys to see something. People tell me all the time, but Mark, it came from the middle of nowhere. But Mark, it didn't hit a fib. It didn't hit a termination condition. How come it's going up, Mark? Well, it's because, guys, you're not in control. Because some guy with more money than you, right at 48.75 and a quarter, said, I want the market to go up. And right when he did that, somebody that was in this big short move probably said, I'm done. I'm taking half my profits. And we didn't see it coming. Not even a little bit. And that's why we wait for the advantages, because even though the market completely reversed from the middle of nowhere, you didn't have odds favorable momentum. And you didn't have an area inside of favorable large triggers. So who cares what they do, right? Because your rules weren't met, you probably didn't get caught out in that one. I hope you didn't. And if you did, well, then there should be an annotated chart somewhere talking about what happened, what advantages were there, what advantages weren't, and you should go study it tomorrow because don't do it again. What else? I'm rambling. Emotion-free trading. This was a good one. The Secrets to Emotion-Free Trading. This was just a good read. This was introduced to me by my brother. And my favorite phrase in emotion-free trading is act in your best interest. There it is right there. Acting in your own best interest. I love that phrase. What else? Seven Habits of a Highly Successful Trader. Another good read. Doesn't it make sense to learn from the people that have pulled it off, to imitate the success, and then learn to build it yourself? That's all the KISS plan is. Hey, BJ, welcome to the room. Perfect test. Got you loud and clear. All right, I'm just going to go through all my pictures. Anyone other than me have trouble following their rules 100% of the time? This was kind of cool. This was created by a Nexgen user about 12 years ago. Um, and he's a brilliant trader. And you guys, if you're ever over there in the trading room, you see him over there. So I'm going to tell you, one of the people that shows the most success over there is the guy that did this. What don't you understand, Cindy? Why we break rules? The box? So, okay, so penalty box. You play soccer? Not trying to stereotype it, you are from Cuba, and all my friends from Cuba, they understand the red card, yellow card. Volleyball? Okay. Um, Boy, I don't have a good volleyball analogy. So let's do this. So Cindy, if you serve into the net instead of over the net, you're going to sit out for 1 minute. And if you serve it out of bounds, you're going to sit out for 2 minutes. And if you miss your set, you're going to sit out for 3 minutes. And if you go to spike it, but you spike it out of bounds, you're sitting out 5 minutes. So what this is this is a chart that helps you hold yourself accountable. So if I miss a good entry, so Cindy, if I have odds favorable momentum, if I have a clear path, and I have an area inside of favorable large triggers, but I choose not to take the entry, then I have to sit out for a minute because it means that my decision-making process isn't where it needs to be, that I don't trust my rules a little bit. If I get in late, I'm going to sit out 2 minutes because all I've done is I've added more risk. If I exit for no reason, if I'm in a trade, I have momentum, a clear path, and there's absolutely no reason to get out, but I get out anyway because I'm scared, I'm going to sit out for 3 minutes. If I'm in between areas and everything is good and absolutely nothing has changed, and I move my stop to lock in profit without having a reason, if you move your stop into areas, that's a reason, right? If you move your stop because of divergences, that's a reason. But if you're up $300 and you put your stop at 275 because you don't want to give it back, you're out for 5 minutes. Exiting late instead of taking profits at the area when things start to change, resorting to hope, 7 minutes. Trading against direction, 10. Trading into an area, termination condition, 15. And if you trade against the area and the direction, you're ejected from the pros room. And the pros room used to be you had to earn your way in. You would go to the rookies room and you would hang out and you would post trades and you get feedback. And after a couple weeks, they'd let you go play with the people that were trading successfully. Here we have the traders chat room. When you purchase software, you have access to it. So it was just kind of cool. And what it does is it highlights the most common mistakes and it gives you a little bit of a penalty if you're not following them. But this is kind of cool. And I've also got traders that use little hourglasses, little 1 minute hourglasses to enforce it. I have traders that overtrade that have ping pong balls and vases, and they're only giving themselves 10 trades, and they're doing it in an effort to really stay focused on the best of the best, to convince themselves that they don't have the number of trades to keep taking maybe trades, to keep taking iffy trades. So kind of cool. And now everything says up, and the path is clear, and it didn't get your area inside of favorable large triggers, did it? And now you're caught. Am I going to just jump in or am I going to wait for a pullback? And that's up to you guys. NASDAQ has weak triggers and divergence and no areas inside of favorable large triggers, and it looks a lot like what the S&P did earlier. And now the S&P is trying to go up, and that's it. That's 3 charts worth of reading in a matter of seconds. I'm rambling, guys. We're probably going to shut down class early. The experience versus time. I'd like to share this one too. I wish Safia was in here. She loves this picture. When you first get the software and it looks like a lot of fun, you're like, this is going to be awesome. I'm going to be rich tomorrow. And then you're like, wait a minute, there's rules. This is kind of tough. And then you follow the checklist and you're like, I'm not sure why, but it's just pretty good. I'm awesome. This is right around 30 days. It's where most people go live too soon, where people are like, man, I'm so good at this. I'm going to fund 27 Apex accounts at $300,000 each because there's nothing stopping me. And then you realize that you have trouble adhering to rules or you're not sure about the rules. And then you get the I don't know shit stage. I'll say it for you, Cindy, so you don't have to. No entiendo nada. And what happens is this is where you realize that it's going to take a little work to get to where you want to be, that you realize that you don't understand the patterns as well as you thought. Um, Sorry, guys. My dog hates brooms and I left the laundry room open. But this is where you have to, guys, 2 things happen at this one. 7 Apex accounts. Cav, when I was learning to trade the NASDAQ, I went through 10 of them in a week. Not gonna lie. Should have been on Sim, but I wasn't. Um, but it's right here, Cindy, where one of 2 things happen. You either quit and you go away and you write a bad review saying Nexgen is crap and it doesn't work and I hate it. And Mark lies every day and I hope he stubs his toe and gets a nasty STD or something like that. Or you say, you know what, I probably need to focus on following the rules. I need to focus on following that KISS plan because I know that it can be done. I'm just not doing it myself. And that's where you buckle down, guys. And this is where you start using that spreadsheet. You're okay, Haji. Man, if it's flat, don't trade, right? Or get on Sim. But this is where, and I'm going to tell you guys, so the now I get it stage, I lost 5 grand. I lost 5 grand in 21 trades over the course of 2 hours. And I had no idea why I had done it. And that's why John put this after you lose $5,000. What he wanted to put is when my stupid brother loses $5,000, this is where you have to make a decision. But it was at that moment, it was with that loss. And guys, I don't mind telling you that I got my ass kicked 72 different ways, right? And I just started learning. And when I first started learning 8 accounts on Apex, I know people that have gone through 200 of them, Cindy. I know people that have gone through 300 of them. People that have blown out, um, 10 in a week. And the problem is they keep doing the same thing. They keep doing the same thing. And that's what I did, is I kept doing the same thing, expecting different results. But my brother told me after I had my spine fusion and I started doing it, he told me to do 3 things. He said, write down your rules. And I give you guys the KISS plan so you don't even have to do that. And he said, take pictures of 10 longs and 10 shorts so you know what your entry looks like. He said, simulate so you don't blow your money out. He said, every time your picture follows the rules, put it in the spreadsheet so that you can study it and commit it to memory. And he said, post in my class, Mark. He goes, post in my class and I'll give you feedback on everything that you do. That sounds familiar, right? This is 3 years ago. This is what my brother told me. Um, and my loving sibling response was, screw you, John Novak. What do you know about teaching people to trade? I don't want to take pictures of everything that I'm doing. That feels like a lot of work. I don't want to fill out a spreadsheet. You mean I have to stop what I'm doing and take a picture and write on it and put it into a spreadsheet and study it? And I fought him 100% of the way, guys. And because I fought him 100% of the way, I found myself here rapidly. And the pictures did wonders for me, Cindy. My thing was I traded into termination conditions a lot. And it wasn't until I posted in class that I realized that that was my thing, that I was trading into areas that had no chance of breaking. And there were even times where I would take trades in class where I would be long and I would hear John Novak in class go, yeah, none of the triggers past this area. It's not going to hold. But I'd never studied termination conditions. All I wanted was to make money. All I wanted was to win. All I wanted was to be awesome every day, but I hadn't done any of the work to get there. So I chose to follow the path, and I'm up here now. And I have a blast watching you guys do that, right? And Cindy, I think you're a little bit beyond the don't know stage, and you probably hit it, and then you tightened it up and you're going. And I watch people do it all the time. I watch people do it all the time. But it is a process, and it is normal to take a step back. It's normal to have challenges. It's normal. All that stuff is totally normal. But I'm going to tell you, the more you put in the room, I love your winners, guys. And if I could fly to your home city and wrap my loving arms around you and say good job, I would, but I can't. So we're just going to high five in the room. But I want to see your losers too, right? Because give me the opportunity to pick you up, to dust you off, to tell you, man, you had 2 out of 3 advantages. Come to Hialeah then. Where is that? Is that Miami? Are you in Miami as well? In Miami? It's on the list. Miami's on the list. If I come, we'll go drink mojitos and hang out. I'll bring my wife. I get to meet your husband. We'll have a good time. I love meeting Nexgen clients. It's fun meeting clients. You guys are the coolest group of people ever. Um, but guys, the path is real. The challenges are real, but the advantages are real. So if you focus on the advantages, focus on why a trade has a great chance of success rather than the things that are scaring you. But if something scares you, drop it in the room. So right now, I'm going to tell you exactly what my analysis would be right now. And I'm going to take the picture. I have a bad bottom, meaning that decisions were not made at a termination condition to reverse the market, which is a little bit of a red flag as I come into a 50-50 trade with the best momentum ever. So what that tells me is that if I'm looking for an entry, a couple things need to happen. I need strong triggers. I need no divergence. And guys, I'm not willing to risk all of it on a maybe trade, which means that I need the tightest little window of opportunity, right? So right now my window is pretty big. I want it to tighten up. I'd love to see it push up a little bit more. So I got my no divergence, and there's my window of opportunity, but I'm not from a good bottom, which means it's less likely to win. Doesn't mean that it won't win, but if I go back to the KISS plan, I have a yes, I have a yes, I have a yes, I have a no. Am I willing to give up one of the 4? But that's how quickly it happens, even talking through it, guys. You're going to get to the point to where you can analyze your charts that fast. If you're a KISS plan trader, you don't have a trade there. If you're growing from being a KISS plan trader, you may. On crude oil, you had odds favorable momentum and a clear path, and guess what? It didn't work. That was a good looking trade though. And here you have weak triggers, and it's pushing. Ran you over. And then I always feel like an asshole when I say this. I want to see you guys get run over here. When you have odds favorable and a clear path, I want to see you take this trade and lose it because it means that you're following the rules. But what's the other side of that? If this is your window of opportunity at 63, that's an appropriate stop. But what happens is we start saying, well, maybe I'll put it down here below the fib. Maybe I'll get in at 63, but I'll leave my stop down here at 53, below the fib, right? You guys want to talk about that? So in order to stay safe on this one, you had to have 13 ticks of risk. That would have kept you out. I want you guys to think about something. Did they really? Did they win? That's what I want to know. Did they win? That's so cool, Paul. As the dad that had the wrestling kid, it was the greatest thing ever to go watch them compete, to watch him go compete. And when he found success and when he really enjoyed it, it was unbelievable. So, all right, guys. If we're only looking at the large chart, whoops, sorry. If we're only looking at the large chart, duh, 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 and look at it, strong triggers everything up. If the market's trading down here, isn't it on the wrong side of everything? Does that make sense to everybody? Isn't it on the wrong side of everything? Everything that says up is up here. This is the downside. This is the win side. This is the lose side. Does that make sense? And I'm trying to keep it almost oversimplified. If I get below the large triggers, and then even more so, if I'm below the large in the synthetics, I'm on the wrong side of everything. And this is one of the reasons why I'm not a big fan of, hey, let's keep holding on, right? Because what do? You're like, okay, if it doesn't go here, hopefully it goes there. Well, if it doesn't go there, hopefully it comes from the one-to-ones. Well, if it doesn't go from the one-to-ones, hopefully it goes from the fib. And then what happens is you get stopped out 3 or 4 times on the way down, maybe even below the one-to-ones, and then it finally goes up. You take 5 losers and you're like, yes, now it's finally going to go up. But you didn't even realize that now the trend is against you, that now the triggers are against you, that everything on your chart says down, and you're still hoping for that long because you get married to it from the wrong side of everything. And again, guys, I'm talking through my life right here. This is like my diary, page 24, um, because I've done it. I was the king of 4 or 5 shots at the wrong trade because I get married to the trade. So take the first one, have an acceptable loss. It's better to lose $100 on 2 contracts than it is to lose 240. Makes it easier to get back in the fight later. I hope that made sense. Here, I've never skied in the rain, Paul. That seems like it would be nasty. All right, guys. Somebody hit me with a question. And C-Dub, one day you won't do that with your stops. One day you'll be like, this is where it should go from, this is where it shouldn't go. And you'll say to yourself, all right. So check it out. Bad bottom. Cindy, have an awesome afternoon. Bad bottom, strong triggers, 50-50, no divergence, perfect low risk entry, quick profits at the trouble spot. If divergence prints, there's room to get out. Did anybody go long on the S&P with that look? And where did the bottom of that tail form? Right at the area of support inside of favorable large triggers. Do I have a to-go place to study placing stops? Um, yes and no, Haji. I think that the easiest place to study placing stops is through studying entries. And look at that, guys, 50-50 with divergence, and down it pushes. So let's go to the user guide real quick, and let's go to the tutorial section. And Haji, whoa, what did I do? I really think that the easiest way to understand stop placement is understanding that concept of where the market is likely to continue. Um, because where the market is likely to continue is where that advantage happens. Does that make sense before I go into it any deeper? When you understand where the market is likely to continue, you know exactly where it should go from, right? So in this particular picture, and this is the one that first introduces stops to you. Once you can create a window of opportunity, are you good with the window of opportunity? So that would be my first question. Cool. And it really is this simple, and I think that we overthink it a lot. If this is the window of opportunity, this is where the market should continue. That's the verbiage that I use. This is where the market should continue. This is where it should bounce. This is where, if this trade is going to work, that's the lowest point where I'm willing to let it go. Does that make sense? And I don't say that because I think it doesn't make sense to you, just because I have to be sure that you're with me. So if this is the absolute lowest point where I'm willing to let it go and stay in that trade, well, then I'm going to put a stop 4 or 5 ticks below it, because honestly, Haji, sometimes it overruns a couple, and that's just a part of it. So about 4 or 5 ticks below the window or above the window is where I'm going to put my stop. Sometimes it's 12 ticks, sometimes it's 5 ticks, sometimes it's 20 ticks, right? So it varies every time. But if you know where the market is likely to continue, then you know where you don't want to be. And let me see. It's I guess. So let's do this in the down move just for fun. Um, let's say hypothetically, of course, because we don't know if this was rules based or not. So Haji, if I enter here, right, up at the top, and I put my protective stop above the pivot, and that's cool. And then the market's going down, and the market's trading about right here. And I say to myself, if I'm going to hold on to this trade and I get a retracement, and I think that that's the biggest thing. If I'm going to hold on to this trade and I get a retracement, where's the market likely to continue? Well, the market's likely to continue at this mid band, right? Which means that the only place I can put a stop is up here where the market shouldn't go. And then the same thing as it comes down. And if I decide, you know what, I'm going to hold through this fib, and I don't think that you should have, because it doesn't look like there's any indication that you should have, then you would have to say to yourself, if I'm willing to sit through this hold, then my stop has to go up here, and it still would have got you because fibs make things bounce. And then if you got back in, it goes above the pivot and where the market shouldn't go, and where the market shouldn't go, and where the market shouldn't go. Ron, have a good one, man. And then the idea is the same. If you're going to take this lower probability trade, this is exactly where it should bounce from, and the area where it shouldn't go is down here until it gives you the reversal bar, and then you can reduce that risk. So initially, it's outside of the window of opportunity. And let's see if we can find a good picture of it. What is that, 943? Let's see what it looked like at 943 real quick. It's a great question, Haji. So here we go. On this particular trade right here, here's your pullback. Your window of opportunity extends from the highest point of support inside of favorable large triggers to the lowest point. Literally, that's your window of opportunity. Does that make sense? So, Haji, if the market is going to continue up with the momentum, if it's going to break the area, if everything's going to keep screaming to the upside, you know that it should go from right here. That's the spot. That's the lines inside of triggers. That's it. I love a window of opportunity like this. That's beautiful. So it means if I go, what is that, 04? 05, 04, 03, 02. So if I get to the other side of everything, right, based on the window of opportunity, if it cranks down below, I don't want to be in that trade anymore. I've lost my advantage because then I don't know if it's going to go to the mid band, to lower fibs. I have absolutely no idea. So for this particular trade, you're probably looking at maybe 6 or 7 ticks of risk. Does that make sense? And then the same thing here. If you tried to take the 50-50 with two divergences, these one-to-ones represent the lowest point where it's most likely to bounce. And what happens is that means you can drop a stop right here, because if it blows through it, you don't want to be in it anymore. I will, David. Does that make sense, everybody? So here your window of opportunity extends from the highest point to the lowest point. It's still not a huge window, right? But that's it. And of course it's a 50-50 with weak triggers and divergence. You're not taking it anyway. But if you decided to, 5 ticks below that window from '06 is right there. That's it. Probably no reason to give up more than 5 ticks. But what I see people do is go, oh man, if I just drop it behind the fib, maybe it won't come get me. And at this point, you're so far beyond where the market is likely to continue. The hell are you hoping for? Stop it. Give up a couple. It didn't work. Wait for the next trade. Stop it. All right, David B., let's go through it. Boom, 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 boom. I love doing this. I think this is helpful for a lot of people. Let me get rid of our cheater here. That's not even the cheater. That's not the one. So David, 50-50, right? 50-50, everything's up. Let's not even worry about areas on here. Let's just focus on the entry. Nothing but triggers. Everybody's good with this look, right? Strong as all get out, nothing in the way, rules met, let's take a trade. Man, that one gets me giddy. So we're watching the small chart, and on the small chart, I finally get a reversal bar. So far, so good, everybody? And in order oh, my stream paused. Hold on. Thanks, guys. Let me go through the rigmarole. I got to kill it and then come back. I'll be right back. Discord. Kill it. Coming back. Almost there. Here we go. Come on, Discord. Almost there, guys. And boom, we're back. Sorry about that. Strong triggers, clear path, everything says go. We get the reversal bar, signals the beginning of the pullback. So at the time of the reversal bar, guys, this is rule number 3, 100%. From the top of the triggers to the bottom of the triggers. Everybody give me a Y if you're with me. I'm looking from the top of the triggers to the bottom of the triggers. I'm quiet. David B1, can you hear me at all? This is for him. I want to make sure. We're going to have him reboot real quick. All right, he stepped out. He'll come back in. Cool. Hopefully he can hear me when he comes through. And then we'll get going again, guys. And I think this is such a great lesson. And it's such a good question. And I need you guys asking these questions. Good now? Cool. So at the time of the reversal bar, the first step is to look from the top of the triggers to the bottom of the triggers. And the tighter they are on top of one another, the smaller your window. But David, this one doesn't even matter because this isn't my window of opportunity. Remember that for a long trade, my window of opportunity extends from the highest point of support, blue Fibonacci, to the lowest point of support, green midband, inside of favorable large triggers. Which means that that's your window. That's the point where it's most likely to bounce. Not the triggers, right? Not all that acreage, but literally from the highest point to the lowest point. So when it comes back, there's just not a whole lot of options. And that's how you get a really small window of opportunity, is by having the triggers very tight on one another. And then even more so when the triggers are really tight on one another. I'm going to pull up my favorable large triggers one. When the lines are really, really tight and the triggers are really, really tight, your window of opportunity is virtually non-existent in some cases. Um, Whoops, get back up there. So on this one, from the lowest point of resistance to the highest point of resistance is just one line inside of those triggers. So your window of opportunity is literally one line wide. And of course, it's an area, so we'll look to get in a tick or two below, and we know that it might go a tick or two above. But it really, really consolidates it. And then the other side of that is when the areas are a little stretched out, you may create a little bit bigger of a window. So it's not up to us how big the window is. It just means where the lines line up. And what's cool is when you've got two or three bounce points right on top of each other, it adds fuel to the fire, especially when they're inside of the favorable. Does that make sense, David? Whoops. That part you got? Is there a part that you didn't get? Then maybe I can be helpful with it. So if we're talking right now, and I don't know if there's probably a midband or fib there. I can tell by the bounce. But as it comes up, there's only one line inside of those triggers. 57 was the only spot where that market was likely to bounce. So check it out. We're going to pretend that the rules were met here. I don't have areas. I don't know. Reversal bar prints at the time of the reversal bar, and this is how we're finishing today. From the top of the triggers to the bottom of the triggers, watch this. Your window of opportunity is that line. That's it. That would be your entry. So if 57 is your entry, I might have a stop right there. 64, 7 ticks. Because when it gets up here, I don't want to be in it anymore. You were using triggers. A lot of people do, David. A lot of people use the triggers as support and resistance. But the triggers are a moving average. The triggers are nothing more than a correction spot is the way I think about it. So I anticipate price to correct to the trigger lines. I'm going to put this template back on. I expect price to come back to the trigger lines. I always do. But if I don't have a bounce point inside of those trigger lines, what's it going to bounce off of? A moving average is not a solid area to bounce off of. It's just an area to look for the bounce inside. So, David, awesome question. I think your trading's about to change for the better. Because what happens if you get in at the top of the triggers? You've just increased risk, right? Tenfold. So oh, and yeah, look at that termination condition. That's why we don't take it. But the idea is still the same. So awesome. And guys, that's it for me today. So thank you, David. Awesome, awesome question. And hopefully a couple people got some stuff out of that. I'm going to post up today's video.